Welcome to the Breakfast Club. It's February the 6th, Thursday. What an interesting night. What an interesting night that was. Nice trade last night right off the midnight open range. Michael taught you guys a month ago, 2 months ago maybe, the open range with the downside objective. This fair value gap fell, and this order blocks high and open mean threshold. And if you look at last night, right off this open range, look at this. I got short here last night. I didn't get short here. I got short here. Stop loss was, I just let the stop loss go. Then all of a sudden, as soon as we came back down below here, I was like, good, now I'll move my stop loss to just over break even and let it run. Then went to bed. And it's a good thing too, because I probably would have been trailing it. Had I seen this here, take that on the upside, I would have been like, oh, that's going higher. And it would have gone higher, but then quickly turned on me. So while I was sleeping, it came right back up into, almost took me out, and then proceeded to auger all the way down to this hourly level right here, where I had my sell order. And it just dipped a little lower. Went right back into this Tuesday first fair value gap. That was an overlap of that one. So if that was your downside objective, good for you. Anyway, let's have a look at the rest of the markets here. I hope you guys are doing well. And do it quick, make sure that I managed to get on here live. Okay, good. We're good. Let's have a look at the hourly chart. Let's start with the hourly chart here. What do we see here? I do like the hourly chart. Two thumbs up already. Wow, there you go. 9 people. That's a good percentage already. Good morning, Russell. Morning, John, D, Russ, Craig. Been trading Disney pre-market during earnings call. Starting day green. Good for you, bud. Good for you. We retapped this premium array. See how we came up, down, tapped it, went all the way back up to this daily price imbalance, kicked off of that, ran through it, came back into it right there. That's your, we're going lower. This was the indication that we're going lower. That was the trade back into the imbalance there, and then the continuation on the downside. Get rid of this area here now. Running back to this candle here, order block again, mean threshold held price. We're pretty close to holding price, and then we trade back through in this, we're inside this fair value gap again, this busy, and we've tapped that imbalance. We have not gone through it again. So if we're going to go through it, you want to see some support above that, and then I want to aim for 21,634 is my upside objective. Right now, 21,576. We keep marching 21,576. But we have to get through 21,552 and 21,564 on a close on the hourly. And inside this range, the range we created from yesterday till this morning. That's 50% right there on the money inside that. It's right on the consequent encroachment of that imbalance. Absolutely not. What's that there? That's what we're looking for on the hourly. So we're just shy of it here. We've just tapping the edge of it here, so I'm still looking for more upside. Looking for more upside. On the 1 minute chart, you can see it's already began already, but you want to see it get through 21,535 on a close. $6049 is your go no go zone. Daily. I don't want to start getting into the hourly charts on this sucker, but who's this Lux Algo? They got lots of crap they put on here. It's hard to read their chart sometimes. Looking for Asia's high and London. We already had that high taken this morning at 7 o'clock. So I'm looking for the highs to get taken one more time, relatively highs here, and start running for the Monday's high. We're inside this gap still. And we're compressing. Gotta wait for a displacement candle on the hourly at least. Natural gas is still waffling around. Copper. I want to see copper get down below 839 on a close. To run for these lows. And it ever hit my perfect spot there. Oops. Sorry, I better just move that back. I had this pulled out here for a while, and that was a downside objective, and just nailed it. Just actually gapped right onto it and left. Gas, gold, Goliath, they're still going. I got out at 187 on these guys. Finally, after all the years of holding it in the gutter, I got out 187 and it's still climbing. It's typical. Oh, that's out. I wanted to buy that and it's out. Oh no, it didn't even come back to it. Sugar. I had this as a buy. It came back down and tapped this, and it never bought. It's off to the races already. I wanted to see. I saw that we closed below, above this yesterday. I thought if we can come back and retap this, it's nice. But I didn't see this over here, or I didn't look over here. I was too busy focused on this line. But if you take the highs, it literally just closed above that high and then opened, tapped it, and left. So I should have been looking at this one. Well, we'll get rid of our potential buy order. And this one here, I had a buy order off of this high. What's the high here? I had it at that high. Did it hit that high? Oh, well, let me have a look at this. I can see where I made a couple of minor boo-boos here. This high here was the high it took. Look at the difference between my entry and my exit put this on last night, so I put it on for 952. What's the low here? The low is 955. What's the high of this candle? 958. So that would have put me in just nicely there for continuation. I was hoping we'd come back and tap this candle. But you take all three of those candles together, and that's an acceptable level. I always put more weight on the last candle, but that's classic Michael telling you got all three of them. You have to account for all three. And that would have been my upside objective. So we still might come down there on sugar. We shall see. And coffee is faffing around in here. I put these blocks in here last night. Or was this yesterday? And now we're just faffing around right inside that area there. Got to break out of there. So we've had a nice reaction off of the inversion. Actually, it's not an inversion. It's not an inversion. It's just a reclaimed fair value gap. You just come down and you just keep reclaiming. This is a BISI, and it just keeps coming down and reclaiming that fair value gap, and then went higher. It went through all of these, and it comes back one more time to reclaim this, taps it, and we have a bit of a reaction off of that. That's a good example of how fair value gaps can hold price. It doesn't just have to be all about inversions. The fair value gaps can do just that. They can hold price just as well. Cocoa's taking that low, so I'm looking for these lows in cocoa, and I'll run back down into this box here. Let's see if this mean threshold continues to hold price. I'd like to see this now take out these lows and start heading back in here for cocoa. I had high expectations. I wanted to see cocoa go higher, but it hasn't. It's turned on us, so you got to be in now. Be on the horse when it turns. You got to be ready for it. So, crude oil. It hit right off our premium array yesterday. Look at that. Or the other day. And we've had a nice little run back down into the discount array right here. Little tiny guy. If you want to see boxing on a 1 hour chart, check this out. That's boxing. And that was literally on Tuesday till right now, this morning. Just hit the box to box trading. You got to be confident in seeing it enough times and try and trade off of it. So you'd have to go back in here and say, I'm looking for on a 1 minute chart, a reversal. And if it continues to hold, then as soon as I break a low, I'm going to move my stop loss to break even. And my objective is to aim for high consequent encroachment or low of the sell side, especially when you get a nice big hammer like that. You can look for a sell side boxing. This is an absolutely beautiful reversal box on an hourly chart. We're showing it on a 1 minute chart, 15-second chart. That's an excellent example of boxing in a 1 hour chart. Gold reversal right here, imbalance. You take all of the imbalance and the reversal here, and you go all the way out to there, and take the breaker. When the breaker and the imbalance overlap, you must take the breaker as well. This guy right here, and you call him or her the breaker. And then you draw them out. You have a breaker inside a fair value gap. Load the boat. Go back over Michael's video and just type in ICT index breaker inside a fair value gap. Maybe you'll hear him say the quote, "You load up the house" on that one. That's a banger. I don't think he says a banger, but he says, "Load the boat." It's such a strong trade. So trade back inside the breaker, right to the consequent encroachment of it, and then just blam. You see a confirmation. So you see this here. Reverse. Take out this little high, a low here. You come back to the lows and continue to aim for the discount array, and you trade through the discount array. So box here, box to box trading. That's boxing inside a range. Boom. This was the secret sauce somebody's just discovered that we've been doing for a while here now. But the secret sauce, extra sugar on top, sugar icing, not that you have icing and sugar on your secret sauce, but anyway, from there to there's your boxing. That's your internal range liquidity hunt, using breakers to support a lower objective. Get confirmations. There's extra stuff about boxing I haven't showed you yet, but there's key things to look for. I'll give you the hint is the boxing is not always a straight run back down. Sometimes it is, but not always a straight run down. It has key objective. It likes to look for before it goes lower. It goes down, back up, and it goes through a systematic process. I pretty much gave it away right there. See if you guys can figure it out before I show you. There's a systematic process that the algo will go to when heading from box to box. Once you discover that, you start to go, holy smokes, there's more to this boxing thing than just I'm going from premium to discount array. More to come on that, my friends. So you've got a small low taken, reversal here. See how there's that whole argument we've had many times before on, do you trade on a close or do you want a body above it? So even if you go, it opened above, came down, tapped it, that's your entry right there. That's a precise entry, but you have to recognize you have to be watching it at 9:05 in the morning, and you have to recognize it just opened, came down and tapped your area. Now you want to go long and catch a long. Inside this range, look for 50%, pull your stop loss to break even, blah, blah, blah. Use the fib tool technique that I've showed you many, many times, and you'll have a nice little run here, and you'll be stress-free and just watching your account grow. And use the fib tool to scale you out. And don't always aim for up here. That's way too many objectives away. That's a nice little safe way to get yourself stress-free in a trade and learn how to be calm in your trades. Don't worry about it. If it takes off, who cares? There's many times. This is took off on these people down here and they missed it. You got a piece of it on the way up. This took off on people over here that wanted to be in it. But look, there's plenty of opportunities coming your way. This is only a 5-minute chart. There's more coming. There's more. There's no need to get yourself stressed out. None whatsoever. So this small range here, this candle and that candle are the only two that are battling right now, here and here. This guy's only just joining the party. So you got to get through the mean threshold of this candle, take out this high, and you're inside a bigger range here. And then you're really between. There's a little tiny one sitting in here. If you look at it, you see that close and that open. See how it's just come back to it right here. Bing, 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 bouncing off of it. That's not just some random area there. There's a little tiny sibby in here. It's bouncing off of it here, finally get some support. So if you go by the theory of we're below it, you wait for it to get above it. It trades above it. So here it went above, came back down, below, above, below. So you wait for that. You don't want to keep getting caught in that above and below crap because you're right near the mean threshold of this candle. So just wait for a significant high to get taken, find some support at that, and look for your premium array inside the range that you're in. So I haven't got much for you in terms of gold right now. I'd like to see that continue going higher, obviously. I'd like to see that come back and give 98. Oh no, this is not gold. This is Bitcoin. 98,344. Or take this high and use it for support to continue motoring. Look at this wick here, divided into quarters, and its consequent encroachment along with this mean threshold here. Then you got the premium array above you. Disney. Look at Disney. He's waiting for the carrot with all the cash just sitting on this carpet right above him. $118, with the smiley face of the carrot. So if you bought some of this pre-market, oh, look at you. You go. If you bought this, if you're still in this, Craig, which I know you are, look at you. You steel-eyed missile man. Look at that. Pre-market is already 114. So you're up another 1% there. Good for you. I'm happy for you, man. That's really good. If you're just working this daily, I love it. AMD still has not got above the level we're looking for on a daily chart. Going down into the lower time frame charts, you'd have to look down in the lower time frames. Right now, this has been a nice little launch above this little swing. Did it take that low? No, it didn't take the low. You got equal lows. I don't think they don't leave equal lows untouched, but there's a lot's got to get through. For me, I want to see structure break above this gap here and get above these two candles, and then start considering, hey, look, you might have yourself a nice little bullish stock there. But until then, if you're trying to trade AMD long term, it's still bearish for me overall. Walgreens. Oh, Walgreens. I like that we've come back and filled that little gap down here. This has all been filled now. It's all been rebalanced. Now the question is, do we get down into $9 and $8.79? Like there's lots of liquidity sitting down here, so I'd like to see if we can come back in and give that a retest. United Airlines came back off here. It's pushed through the mean threshold here. I like this. I like to see if United Airlines keeps marching higher. I'm not going to dig down into the hourly things. That's for you guys to do. But on the daily chart, this is looking good. You've got some support off of this level, and you're starting to move higher through the mean threshold. Yeah, I'd say I like to see that keep moving. ING, nice little play off the low here. Remember this equilibrium or this consolidation here. You finally have displacement come back to the top, CAM model 1, and then we've had a nice little run up here. So you're like way up, and your pre-market is already 1668 already. So a beautiful 1603 retracement back to the old higher CAM model 1 entry for a continuation to the upside. Take this out here and find some leverage in here to continue pushing higher. This is what you're going to look for. I don't know what is ING? Is it like a financial institution? Is it an insurance company? I have no idea. Whatever ING. ING Direct. Is it like an investment group? That's where I'm looking next for ING. 1786. And that puts me right in discount array. So if you go from discount, gap, take this lower here, discount to premium, draw it out. That's where it hits, right off the bottom of your premium there. So anyway, if I was into that, but I don't know what ING is. Look at that. Quick run up and then a slam down. So that's a Royal Bank. That's our biggest bank. So if everybody else is starting to turn, Big Bank of Montreal, Royal. So if banks are on a turn, I'd like to see that market structure. February, I want to see a nice little pullback in banks. I didn't want to see that run all the way back up. I want to see that come back down again now. We shall see. And AMD. Oh yeah, we actually broke this down. See, look at that pre-market. AMD. That's not the same one we were just looking at, was it? Back here? Yes, it was. Roll over. Look at the pre-market. It was 119. It's 107. So you're going to gap down again. MicroStrategy Incorporated, whoever gave me MSI last time, you're up. Let's get rid of all this stuff. You don't need to see all that long. It just makes things messy. Nice. See that little tiny imbalance? The buy side imbalance, sell side inefficiency, that BISI here becomes inversion. You finally get above it, come back and just clip it right there. Start to move higher. These equal highs. Now you want to see these equal highs we're taking here, but now you really want to see a body drive up above them. So I'd like to see this drive higher. It's got to get through the mean threshold of this candle here and then push higher. ICAD reverse or change direction inside this range, looking for premium array boxing. If you're boxing with this if you're doing some boxing with this little baby right here, that's what you want to see. So you trade above it, below it, above it, below it. Then all of a sudden you trade above. So you want to see this consolidation get revisited on the downside. It didn't. It got you an institutional order flow entry drill. Mean threshold gets taken now. Watch that go higher. If this just bops in here and then comes back down and finally taps this, leaving a small portion open, look for the consequent encroachment, which happens to line up with these equal highs to go higher on ICAD. I'm spending so much time on these, but British pound back up into our objective here. We did come all the way back down to this order block. It's a breaker here that took out this little high. We've retapped that, going higher. New Zealand dollar, they're finally getting back in sync. We want to see this mean threshold here get taken. This has already been taken. This high has been cleared. So next upside objective is I want to see us get, well, so far it's happening, 2507 or above that. Keep coming, and then you want to see tomorrow come back, retap this, and then start marching higher. I don't want to see this turn into a wick now. I want to see this close today, Friday come back, give that a little kiss, and then next week, March for buy side, and British pound. Aussie dollar, nothing. New Zealand dollar, for sure. Back in the saddle again right here. Look, watch this imbalance. If we can stay above that and use that for support to go higher, along with this order block, I like that for higher. We've hit the upside objective we were looking for in euro again now. We've retapped it, so if we can get back up on top of that, get inside this little inversion here, and then use that for support to go higher. Canadian dollar is finally gaining some strength against the American dollar here. US Canadian, so US dollar is losing ground against the Canadian dollar. It's lost 6 cents almost. Holy smokes, what's going on? What is going on, Sir CAD? You CAD. Japanese yen looking for this upside objective up here. I like this. Why didn't breaking out of here? Find some support on the short-term objective that we were looking for a while ago. And now I'm looking for, if you're going box-to-box trading, it would took you a long time to get your box-to-box in Japanese yen. You can see why Michael doesn't like that one. And I'm not custom making this. I am going right on the premium, first premium array. I know, I did it again. Stubbornly trying to pull that without moving my charts. So take a look at this. Inside this range, from here to here, discount, premium. You're inside the first premium. The second premium will be right here. And once you can get through that level, look for a rejection block, 50% wick, and then can start looking for the next upside goal. For Japanese yen. Silver, look at that. Come on up. Silver, I want to see that start to move up inside our premium array again now. So look at the 25%, 50% of that range. That whole big gap that I printed out for you yesterday. Let's hit our upside objective again. Look how choppy this is on a 1 minute chart. Eek. There you go. That's the which one is this one? Mondays? Yesterday's. No, last night's. That's last night's open. That's the one we took on the way down. There you go. It's finally made it all the way back. Right to the open. Midnight open candle. See that? Just nailed the midnight open and poof. Pop right off it. Now you got your first presentation for Valley Gap. Look at that. Tap it. You want to see it that goes higher now. Keep running. So let me get back over here and say hello to the rest of the people. John, good morning. My kayak, my kayak, I don't know if I've seen you before, but good morning, good morning. Erica W, good morning. Campione, hello. Quick Solutions. Dave Barry, my man. Dave Barry, hello, good morning. Sitting at the shop watching charts, waiting to buy oil low. Get good tires, Dave. I worked in tires for 10 years. They save your life. Yes, part of the car. Touch the road. Don't skimp out. Nope, never do. I got hot little I don't even have all seasons. I just have pure winter tires on my car. I like them. They give you super good stick. They stick to the road. In wintertime and summertime, I don't care if they wear out quicker. They're softer rubber. We don't have enough warm weather here to really get good uses out of summer tires. So I just leave my winters on all year and then put new ones on the next year. They'll burn out a little faster because they're softer blend, but awesome stick though. And these ones are quiet. They're not actually like super noisy like you'd expect a winter tire to be on the highway. No body above here yet. Craig, I'm long with WBA. Yeah, I'm long on that as well. I went pretty heavy into Walgreens. So I'm long on that as well. 1 year calls. Let's go UAL. Hi, Paul. Good morning, Paul. Can you show boxes on gold? Saeed, can I show boxes on gold? Yes, sir, I can. I can show it to you right here. This was the open. Again, you have to be aware of this. And I'm not form fitting this because if you go back over all my lectures in the past about boxing and inversions and reversals and stuff, you'll know the debate is whether or not you close above the inversion or close on it with these big wicks. Is that the little probes that tell you, hey, look, we want to go in this direction? Usually if it taps that and it's got intent to go lower, you don't see these little probes that start to go up there. And this often happens when you have a close on the same place as the high of the inversion or the fair value gap. In this case, it would be just a fair value gap. So if you close on that, then you have to, I'm always a firm believer in it. You have to close above it, come back and tap it. But if you open above this level and then come back and tap it, that's perfectly acceptable as well. So there's your perfect entry for a box inside the range, box to box trading, or my boxing strategy is right here. See how these highs were taken out? This reversal happens like this. You look for this opposing partner on the opposite side. So you look for, if you have a SIBI here, you look for an opposing BISI on the other side. Not a SIBI, a BISI. I know Michael likes to play with these ones here or the breaker. I like to go for the BISI. So the opposite one on the opposite side. So SIBI, BISI, this is boxing. This is theta wave boxing stuff here. So you box from here and you run for the premium array. And there's more to this. I'm just giving you the basic boxing right now, which is from here to the most high. And there's your premium array in gold. So box, perfect to box, whether you take it out here, here, or there. Often the box, it will come to the consequent encroachment, hit it, not even give you wicks here, just tap it like that, and then just rip right all the way back down to the next discount inside this range. Or order block or breaker. So breaker inside a fair value gap, hits it, and now you get a nice reaction off of that. So that's box to box or boxing inside gold, my friend. I hope that answers your question. Um, AMD is crushing my long-term portfolio. It just keeps going down. Oh, that's terrible. Thanks to DeepSeek. Not trading a cat until after earnings now. Russell, you're right, man. I wish it had never released huge as silver. The gap in silver? Did it go somewhere else? Is there a huge miss that I've missed? I have to pull my chart. What are you talking about? A huge gap in silver? That? You think's a huge gap? I'm not sure. I don't know what you consider a huge gap. Anyway, look at this. See how we've retapped this thing? So I'm long in this right now. So we're seeing if that can continue climbing higher. As soon as it takes that high out, I'll move to zero stress trade. Huge thank you Midnight. Good morning. Thanks, sir, for the nice explanation. You're very welcome, sir. You're very, very welcome. I hope it serves you well. Right at midnight open again. I like the way we use the first presentation fair value gap here. You close above it, you come back, give it a little kiss here, and then start moving higher. So that's a beautiful thing. It's a beautiful thing. Nice explanation. Yeah, write that down, Saeed. That's boxing, my friend. You'll see I've got lots of videos on boxing. Boxing with the carrot. Now you know why the carrot's our mascot, my friend. Go with the carrot, not the stick. I'm gonna get a AI to make me a carrot in a ring with his boxing gloves and a stick lying down on the ground, and the carrot with his foot on the stick. Always go with the carrot. That's going to be my next AI picture. And then every time we win boxing, I'm just going to put the carrot and the stick up there. See you later, Dave. He's not even messing with today. Buy puts on AMD. Yeah. Akeem Carrot. Yeah, Akeem, that's our mascot, isn't it? Carrot. So looking for the premium array up here right now at 634. So I'm looking up in here. And now I'm at break even plus cost of the kit to trade. So zero stress trade now. I don't want to see this carrot. I don't want to see this candle here get taken on the downside now. And we are hitting at 45. So I don't want to see it start coming back down here. 45, 48, 50, 52. Let's go, Tibby. Let's go, Tibbs. Let's find support, mean threshold, old high, or old open. Get out of Dodge. What else we got here? Is your first presentation fair value gap set to include immediate rebalance? Is it set to include immediate rebalance? It's, I don't know what. It's not an immediate rebalance though. Immediate rebalance would be all the way back into here and fill this. Then that would be still classified as a fair value gap. Really, this should have been down from here to here. This little tiny thing. I don't know why it went to there. We're on a 1 minute chart. That's interesting. I have to ask Tristan. Did you guys get the same first presentation from the 934 to the 932? So the 933 candles. Did you guys get that? Do you have this wick? Is it a full rebalance of that? That's a good question there, Erica. Yeah, you're right. That's a very good question. I'd have to ask Tristan that one, because typically it would be right here. Let me see what that one is. That's the high. Yeah, that doesn't make sense why it's including that wick. If that came all the way back down, I could see it possibly, but it should, you know, what do you guys have as your first? If it's immediate rebalance, it isn't a fair value gap. Yes, it is. An immediate rebalance is still considered a fair value gap. But I don't know if he still considers an immediate rebalance or he just looks for a fair value gap itself. So I just want to know if you guys have your fair value gap at 537 to 535, that 2-handle fair value gap, or do you actually have your presentation right here? Because for some reason that one looked like it worked nicely. So still looking for 631 up here. It does not always immediately rebalance. 938. You have 938 as your fair value gap. This one here. That's, oh, sorry, this one here. Interesting how we've got conflicting views about what the first one was. Yeah, I don't know why that's programmed into how you identify a portion of, because that's not an immediate rebalance for me. So I don't know why it chose that one. That's a good question, Erica. Yeah, just stick to ICT's rule on that one, and take the first fair value gap only. and save yourself the aggro, which for me would have been right there after 9:30, after 9:31. Right there's the first one, and they can be tiny. Get right on it. There's the premium box right there. So if we get below this low here, look for this return to the first presentation again. We'll see if that how it acts inside this whole box here. Tristan may have actually seen something or programmed something that I'm not aware of. We've got this guy right here. We're back through the wick through here and a 52. Watch for down here now. This little guy. I want to draw this one out here. See if there's any sensitivity at this level here. We've bounced back off. See, we've traded below this, tapped into this. I expect to see if that comes lower now. I'm moving to break even already. I'm just going to chase this one down a little bit here. See how it acts in here now. I just came back and popped me. I chased that down a little too fast. I wasn't sure if we hit this thing here and bounce off, or whether or not we're still inside this breaker here. So I wanted to see if that mean threshold of the breaker, so it came back and just popped me out there. Tap on here again, continue going lower. So half this wick, which is the consequent encroachment of the midnight open range. And this is 55. There's 50% of that wick. $55's giving us a turn. We're well past the 50% of that wick already, and half that range. We're coming back to tap this inversion. Let's see if 58 pushes us all the way back down here now. Oh, I'm already out of the long. I went short already. see how that little imbalance occurs right here? If you close below that, my stop loss was hugged right up behind this. Remember I was saying I didn't want to see it close below that candle. I was pulling it up through here. And as soon as we took out that high, I moved to break even plus pay for the trade. And then when I see this happening here, it starts to reverse. Then if it closes below it and does not retrace back into it, get yourself out of the trade. So your fail safe is always looking for here. And where's the failure point? Well, the main threshold of that candle, you wouldn't want to see it get taken on the downside. Or whatever, what's your strategy? You don't want to see this get taken. Remember, that candle was important to me. I didn't want to see its low get taken. But as soon as you start breaking that high, then you start looking and saying, I don't want to see that get revisited, the high. At best, I don't want to see that mean threshold all in one candle. Remember, I don't know if you've been here or not, Erica, but whenever you hear Michael say, if one candle runs through 3 PDRAs in one time, your ass is next. So this candle went ripping right through 1, 2, 3 PDRAs inside a candle that I was considering important because it's the lowest down close candle. It's the breaker that sets the run above these highs. And if you start eating through the breaker, it doesn't provide support, your ass is next. So you're back inside the range again. So you've got this here, you've traded through it, come back into it here, that's your short, and you're looking for a discount array down here. So for this one, your stop loss would have to be just above this candle's open. And there you go. Now you're hitting that discount array. So you see how your first leg, second leg should be taken down here now. You got to be quick with these things. So your fail safe has to be a fluid thing. So we're looking for a sweep of these lows now. As soon as we see this candle, this low here get taken out, we have run it right to the open of that candle. So this is the breaker. These candles are the breakers that take out highs. So the last one is the most sensitive. So I look at the open, the high, and the mean threshold, and we'll see. So if this is the next price leg down, I'm expecting to see price come all the way down to here, at least here. We got to get through this to confirm that though. We can get through here, find support on this and that mean threshold. Let's go. Because you have to look at your wiggle room from here to your mean threshold. So if that holds and starts to go back higher, I'm looking for this level here to get taken again, to get back in sync with running right up to that little imbalance that we poked. And you got to draw that sucker out right there. And as many times I pointed at people go, that's not significant. You want to bet? You wait and see. You wait and see how important that level is. How price will react off of it. D is very fast. No snoozing when he's trading. No, sometimes you got to catch her, yeah. So there's your box to box again. See that? That's so delicious. So you go from that, if that was your little one down in here, or that, whatever your argument's going to be, that little open range or new first presentation, that's your first one inside this range. It's the discount. A premium would be your first one's here. Second one is right here. So we'll see if we reach for that little tiny clipper right there. Remember, breaker, boom, right through it. There's your box to box, ran right through it. Woo, and there you go. That's crazy. So again, we're going to say if you close above that box, find support at it, look for a run to the highs. And this is why if your stop loss, let's say you wanted to go short off of box to box, and you put your stop loss here and you had a limit order there, it just took your limit order and ripped it through and took your stop loss all in like a millisecond there. And your fail safe's here. So if it ripped through you like that, that's one of those, that's why your stop loss is for these quick moves like that. That's what I'm really willing to risk. So if your strategy is this is not a loss. You've just paid for some information now that if that closes above this level, we use this candle and this candle as support now to keep going higher. But it has to close above here, or on the very least this candle here, or this box. There you go. So we have not closed above that level on a with a body, but I do like this breaker now. Watch that level. And watch where the body ends. So now I'm expecting to see this continue marching higher now. We've come back into that little array, and now you want to see it march higher. Immediate rebalance. Little gap. Still no body above it yet. And this is the 2 mean threshold. Got to get a body above there and tell you. Retap this. Inside this range, often trade entry reversal. Is 72%. Look at, watch right here. Mean threshold, yeah. Rip right through, looking for a lower. See, we did not get a body above here, right? Wicks do some damage. If you're thinking about, I want to see that go higher, I want to see it go higher. I want to find support. I don't want to see it keep going higher. Then all of a sudden it keeps coming back. You go, oh, that doesn't look good. You haven't got a body above here yet. You got lots of wicks running up there. And look at that, rip right back through us. Chops fill. Look for this guy right here now. That's not the price leg. Ignore that. That's not the price leg. I don't care if that hits off of there. That's not the price leg I was looking for. The price leg was from here, not way up there. So that thing's automatically discounted. Running off the lows. Boy, that's a sweep of both sides, hey? I can't even see a reverse in here. That, even if that was an immediate rebalance and you ran through it, you still didn't get an opportunity to get it here. You don't get anything here. You don't get anything here. It just comes right back through everything, cleans everything out. So there's no setup there. Tuesday, 21/6/16. 21/6/16. Let's see if it comes back into this box here and continues going lower. I'd love to see that just turn around and go back up. I agree with you, Derek. I'd like to see that come back up into 21/6/30, 6/30. You're 6/16 and 6/30, not too far from each other there. See if we can get back on top of this. Oh, that's a 0.7. So I'd like to see a reverse here, or this turn into a wick and then start moving back up. So you want to see 9, 10 start making run higher, and then you're getting into your squabbers. You want to get in that 50% of that range right now. That's what I'm looking for the 9, 10, 11, 12 candles. Target me for tomorrow. I'm short at 603, 70% of 50-minute swing inside the fair value gap. I just can't find a spot to enter yet. Good morning, Chris. I hope it doesn't get through those 50-minute bullish breakers or what. That will tell me lower rather than higher. Your 9-10 turn. I wanted to see this start to really push higher, getting into that 50% of that range, but it's not happening. So this feels like it's potentially bearish here. This is holding price right now. And see how we're banging off of this one and that one. We're just sitting on it and sitting on this. We're kind of bouncing around between the two. So this one's got to let go to go lower, or this one has got to give way to start moving back into 50% of that range or more and back into this breaker. You're still hitting the wick of this. So you see how the overlaps of the breaker, it's wick low and the open. Let's see if we can get 50% or more of that range. That'll put you right back up into here. See no body buff here yet. Here's the 9-10 turn. 50% will put us right near the top of the fill of the SIBI. Inside that little fair value gap right here. Bang, bang, bang. Still holding it. This is where the squabblers come in, 6, 7, 8, 9, or the 7, 8, or 9, 10, 11, 12 candles. Oh, I'm not even way over there. Sorry. Jeepers. Can't get with the program, Darren. Where am I at here? Right here. You don't want to see it get through here. I see where you're going, Derek. I could see that come down to 497 to 497 to 494. Just feels like it wants to go lower. Look at all the probes coming down, probes going up. So 497, looking for that level down here. 496, 494. Look right here, 494. Yeah, agreed. I agree with you, sir. I totally agree with you. Now we're below that level. See? Body's traded below it. One more time off of here. Usually you want to just see it come up, tap it. If it's got aggression to get down there, you see this come back, tap that, and then go, not this constant revisiting back and forth between these two. But see, now the weakness shows until we see a body break above this. Now you've got low, and we haven't even extended the range. So this is just revisiting back into the breaker again here. Perhaps right to 542. You see that other first fair value gap? This little indicators discovering or saying it's still staying inside that as well. I'll have to ask Tristan why he is this a glitch or is this a reason for this? So look for 50% of that range again. Sitting right here. See, now we're above that. We closed above it, tap it. Back inside here, there's 50. Just got into the premium level. The premium box. Look at this one here now. Is that all we need now to come lower? 501. 501 puts you in the 50% of that wick. This is a choppy one, this one. It's a market that can beat you up in here. And it's non-farm payroll week, so if you've got any profits, keep them in your pocket. Keep it in your pants. So there's 50% of the range. At 21,435. So if you're going box to box inside a small range like this, see if this taps this one here now. Boop, right there. Done. Box to box inside that range. Like right on the money. Tell me those levels aren't important. Right on the 16 candle. So if this continues to push through here now, mean threshold as well lines up with this. So does this hold and we start to come back into that range? Like 16 holds, or does 17 make a new low and then we continue pushing through the lows here, getting back down to that 9, what do we say, 494. I think Hans was just saying 21,435 would be this London low. So we stopped on that. We got a nice little wick here at 1617. So this small range, I'm looking for this guy right here now. Always keep moving your eyes back and forth. Don't let take your eyes off the chart for a second. You got this inversion here now. Find support. You want to see if this comes lower, or we use this to go up to the premium area above you. If we're just coming in here to go short, watch this level. See that? Consequent encroachment. Blew through here. Again, this area, this small little imbalance, but look at how strong it was for a while. And it's finally give up the ghost here now and come back lower. We've hit the premium array right here, the consequent encroachment. So we want to come all the way down into here now. Oh yeah, here's the downside objective right there. Look for box to box right here, man. Look for this to come into here. If we lose that low, I'm looking for a run back into this level here one more time. Look for the first one. So again, that breaker that yeah, I'm looking for here and here now. If we can get through this order block, if this gives way, we're returning into that discount box. Oh, get this up behind my back. Come on, stop fiddling around. Get to it. Premium array. That little sucker, man, did it ever... It's sure taking a beating. It's still holding out, though. Came back up into that premium level. Tapped it. Let's accelerate through here now. You can salute that guy and say, well done. Good support. It's like, I'm not dead yet. The old Monty Python. I'm not dead yet. Ring out, you're dead. You're done. You just don't know it yet. You've been skewered so many times. Give up the ghost, my friend. You're over. We bid you a fond farewell. Thank you for your support. He's like, no, I'm not dead yet. Let's wait for this one to close. It's like, you get back here. It's like the Black Knight. Cut off an arm. All right, it's just a flesh wound. Cut off a leg. Come on then. I'll kick you to death. Come on. He's not giving up. That sucker is holding. He's been skewered. Barbecue skewered so many times. But he's not giving up. I love it. Yeah, I'm in a short. I'm in a short. If it takes this guy out here, I'm just above here. He's like, ha, I told you, I'm not dead yet. He's holding on. This is the last premium array to reach for inside the larger range. The body's holding the mean threshold of this candle. Wick did a lot of damage. I think they're just backing up to run over him one more time. They're just backing the bus up over this guy, and he's just not giving up. They ran the bus. They're like, look, we can't get over this guy. He's like a speed bump. Back the bus up further, take a bigger run at him. This could go higher. This could end up being the consolidation reverse cam model for a higher run. That bouncing right off that midnight open range, right to the consequent encroachment. Open range low. I don't like this retesting. I'm out. Let's go on higher. Yeah. It's a cam model 1 right there. Reverse this consolidation. This guy's hilarious. I just picture this guy in one of those carts going, I'm not dead yet. Yes, you are. You've been skewered so many times. So now if we get above here, Now we're looking for a run back into that range. So Derek's got his dream. He got his support off of his order block here. I work well. Well seen, Derek. Good eye, man. Right into that premium level again. Now you want to see it climb up on top of here and get back in sync with the market again, right? Yeah, you got to be able to say, oh, it's going lower, and that's why you got to wait for the candle to finish painting, then make a decision. It scared this. I was absolutely convinced many times that we were going to come down here, but they never painted below that guy. He said, I'm holding you back. And then you start to make this move above that level. You go, oh, do we find support on that? And then it ran through the second one. So do you find support on that level? You got to pull this old one. Where did that old one come from? Oh yeah, from the first presentation. Right inside that first presentation one right there. Look at the body still holding that. If you believe that that's the first presentation for value, yeah. That held price right there. Pop back up. We want to be above here now. It does. You're looking for your premium array inside the larger range now. That's been hit, skewered multiple times. So now we're going to battle between the small box and the large box, and we're just going to keep skewering each other back and forth here now. I'm not touching this. This thing's got to smarten up. It's like I've made some money and I've given it back a little bit back today, but I'm going to keep my cash now. I'm not giving any more back. So wait for a nice clean run, like a nice clean setup. This is just Slopsville. So if you've made money today, keep it, put it in your pocket, move to the sidelines. And oh yes, our little friend way up here. What? Don't forget this little fella way up here. That's the next one. That should scare you, Derek. That should scare you. That's some choppy price action. See how the wicks were really, really doing the damage here and really throwing off a nice clean analysis. Like these levels are, the bodies are doing some nice stuff, but man, the wicks sure did chop the crap out of that. So that's the kind of thing you screen capture and you say, at this time of day, 9:30 to 10 in a news release day, do I want to be dicking around inside the charts? Do I see anything clean set up in here, or all these wicks starting to form? 10 o'clock news goes into Chopsville. Just wait for a high or a low to get taken out and then get back in sync with the market. You're not missing out. Just wait for it to get, if it takes off on you, go, oh good, finally it broke out of that crap. Price is cleaning up. Can you get on the next price leg? Yes, my dear. Okay. So we're through that one. Back to here, find support. We could start going higher now. I'm going to wait. Still don't engage in this. I wouldn't recommend you engage in this at all. Look at that. Just ripping right through it again. Wait till it breaks out of this slop. There's the premium level, the discount level. See if it premium. You've traded through it on a close. You've come back inside it, so that engages the premium. Down to the discount. You hit the discount on the hourly. Back to the premium again. Now, if we come all the way back down to this discount, you're going to see how you can get really beat up inside here. So I am going to remove all of those. I'm just going to kind of watch it. Sorry, another day of not a lot. I managed to make my money while I was sleeping, and giving some of it back this morning. So I'm not doing any more. I'm not giving any more of that back. Would you discuss the time stuff a little for those of us who are newer? The time in a bottle? Tibbs? Is that what you're talking about? These blue dots? Erica, I will refer you to my video section, and I have a thing called time in a bottle, or what we call TIBS, time in a bottle strategy, and it explains to you what all these blue dots mean. And there's more advanced stuff that I haven't talked about in that, but I've given you a really good understanding of TIBS. And if you take that and it's a fractal thing, so I know it works on all time frames, all asset classes, everything. It's definitely algorithmic. It took me a long time to figure it out, but it's a time in a bottle. Time has been bottled for you, and these levels are precise times where you're expecting to see markets shift, move, and when you hook those up with a specific PD array, then they become like super dynamic. It's another tool. It's not a be-all end-all, but it's another tool to help you navigate where you want to see price return to at specific times. When Michael was talking about time, he wasn't kidding. Time is crucial. And I vaguely remember him saying, you don't even need a chart to trade the markets. You can just trade it on time. That got me thinking. So I did a deep dive into this and found these crucial levels. These dots here should be sitting right here. This was the squabblers I was telling you about. So they'll tend to go back and forth. One of them makes a high, or they each make highs and lows. And there's your 21, making its low. It's a swing. You'll see these swings occurring. So key levels, key times. And we use time in a bottle, TIBS, with the boxing, with fair value gaps, order blocks, mean thresholds, all that kind of stuff. You just start to go, holy crap, it's super powerful. Even in choppy times like this, you'll still see these things making highs and lows. So I refer you to my TIBS video. It explains it all there. You watched it. Did it make sense to you? If you have a question, ask me a question about it. Gotta watch the time in a bottle video. You didn't know Tibbs was time in a bottle? Time in a bottle strategy? He's like, Tib, what's Tib? Ask. Just ask. There's no dumb questions. Just ask. This is like what we're like in paramedics. It's almost like military, right? If you can't spell, you abbreviate everything. It just reminds me of that joke that the cop who couldn't spell. So he was like, he's doing a report, and he's like, victim was found, his arm was found on road. The torso was found in the car, and the head was found on the boulevard. Head was found in the ditch. So yeah, anyway, if you can't spell, we use abbreviations for everything. WBA on a run, slowly. WBA, come on, get up there. I'd love to see this start marching all the way up into here. Get back up into that premium array right there, and then beyond, recover. Let's get this thing back up into this area here. That'll be a 40% return on the money. I like it. So I got my purchase inside this box. So I want to see this tear out of here now. I thought it would take a run down here yet. We're nowhere near getting out of here yet. I don't see any reversal on a daily chart. So this could just come up to here at 1053, roll over and come all the way back down. $12s will be a first level then. Well, we got to get out of here first, Craig. You know, if you pull that whole range right now, pulling this whole range, we've rebalanced this here. There is a discount box down here still. This here, you got these little imbalances here. So you literally have to take this from here all the way up to here. We have to get about out of that. And then you're looking for 50%. If it got that, if we can get above 50% and really start to see it march, I'd like to see us pull up to here. I got this on the wrong side here, I bet. Well, that's right. So inside that range there, 50% puts you $11. And if we can get above that, then I'm starting to look for a retap of this up in here at 12 from 1175. Actually, no, it'll be 1190. Let's go box to box. If we're boxing this, that's what I'd be looking for right there. and that's 20%. I'll take 20%, move to the sidelines. Because they're not doing a, didn't you say they'd stopped providing dividends? I think that was the news release. Oh, a lawsuit. That'll screw up your profits for a while. That was yesterday. People are suing Walgreens. Patient infringement. Oh, God. So drop your stock down into a nice little level and then start pumping her up. That's a discount. And you look at that on a weekly level. That is a discount box right there. So if we can get back above and use this candle as support on a weekly level, now we're laughing. Look at the potential box to box on a weekly level. You'd have to take from here, there, right up to there. So if you're going to go box, now we've traded, see the thing here is we've traded below it. Now we've traded above it. We've come back inside it. And now I want to see that go higher. So you have to get back through this level on a close, find support at that level on a close, and this order block. If we can find support on top of that and clear this guy out here at 13 bucks, Walgreens is going to be that's 150% return up in here. That's not encouraging any of you to buy it. That's just what I'm looking at. And yes, it is a gamble. If that rolls over and comes down below this level again on a close, then we're running for these lows. And then we're really going to take a beat down. But all the time it's staying above here. We've got a positive deflection away from here on the weekly. We've come back and retapped right into the bottom of this fair value gap. It's been, that BISI has been filled on a weekly level to 962. So your perfect entry would be there. If it trades below it on a close and then comes back into this, get your trade off at break even and then wait for a new run above this high on a weekly level. You got to be patient enough to wait for that. But anyway, that's my analysis on Walgreens from what I'm able or want to share with you folks. I don't know if that aligns with your thoughts there, Craig, but push it up, 21,116. Ooh, Nelly. Let's get up there. Look for the premium array again. Look at that, hey? Premium discount, premium. Eat through here, run for the highs. And it's NFP, non-farm payroll tomorrow. That could take that up there, easily run those highs out. So here's this example right here. So if you're going from box to box, and let's say you weren't 100% sure whether or not that box was going to hold. You say, I don't know if that's going to hold there, and it'll go all the way through there. So you look for a reversal at this time. So you go time and price. There's a 5. My Tibbs is a 5 turn, a 3-5 or 2-4 turn. You'll see these, and you look for a turn. So 5 o'clock. Where's my 5 o'clock? You look for a reversal at. So as soon as it starts hitting that level, you say, at 5, where is my reversal? So here's your 5 starting here, and it's hitting a Tibbs, or it's hitting a discount box. So you're looking for any setup in here that will give you an opportunity to go long now. So as it starts to drift into here, you go, do I find a long? So here's that low right here, and there's a small little reversal here. body trades up, comes back inside it, starts to go higher. You go, I'm not convinced. I want to see this high get taken. Okay, so you see that high get taken right there. Now you see this one come back and give it a tap right there. It does not. So you wait. This is the next high. So your stop would have to be sitting below the reversal. So you're here, body trades above it. You go, good. Now I'm going to use this candle for support to go higher. So it comes here, down, taps. Now you say, now I'm going to go high and I'm going to leave my stop loss down below that low. I don't want to see it. Or you look below this fair value gap. You want to be just below there, because your fail safe is if it trades back below that with a close, then chances are we're going to take another run on this low. Otherwise, that's my support level. I want to find support off of, and it does, bang, 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 and then goes higher. And again, keep in mind the stop losses here or here, whatever way you want to, whichever one, your fail safes here, your stop losses here. So I'll put this forward so you can see what kind of outline there, and I'll let that go forward. I'll call it a breaker, but it's not a breaker. I'll call it a Mona, because those extend all the way up. So I don't want to see it break below that low. Stop losses here. That's your entrance. Even that big wiki crazy crap that's happened this morning, and you never traded below your low. So that's what you look for. Every single time you get to these levels, you can start to say, now do I see a reversal in here? So when I go box to box again, this is boxing. So now you got boxing back the other way, and you say, I caught this morning off of a logical level. If you're trading London low, that's your 5 o'clock. Okay. And then that's your fail safe if it gets below that line, and your stop loss is sitting down here, and you let that sit, and you the next macros ought to begin. So then you look for, that's my upside objective from there to there, and I'm out. I'm done for the day. If you're aiming for these old highs, great. If that reverses on you and comes back down again, you're like, oh, damn it, why didn't I just take box to box trading? That in itself is just a strategy. If you choose to use it, it's entirely up to you. You would have weathered all of this. And if you're looking at a 1 minute chart, there's way too much influence in there that would have thrown you off. Even the best traders might have just looked at that and went, oh, it's turning on me. I'm completely screwed my trade. And now all of a sudden it reverses and goes higher again. And all it did was come back to this last down close candle. It's high. See that? All the way back there, taps the high, and then starts marching higher. So your stop loss would still be safe. That's the power of Michael's observations. Like, he can put a stop loss here and it starts to march. And then he's like, I'm not touching it. He'll leave his stop loss sitting down there. And it's not till like hours and hours and hours later, he might see him go, okay, I'm just going to move this to profit. And I'm going to take a small portion off it, whatever, right? Like, you might take a small portion off right there. Right at that very bottom of that thing. So you didn't have to endure all this. You would have taken your trade from there to there, done for the day. You move to the sidelines and wait. It's a strategy. You just have to decide whether or not it's one for you. So now you're up to the consequent encroachment of this. And again, you're looking for a reversal to say, is this going to go here and then start to march all the way back down, and we stay inside this consolidation before we wait for non-farm payroll tomorrow, right? So if this reverses here and comes back down into this discount array again, you're going to be like, ugh, why didn't I take that? Well, start looking for your reversals here. And if they don't reverse and they just keep coming through, catch a reverse off of here. So if it comes back down, taps it, look for a reverse to continue to take those highs, or rejection block first and the highs. So you look for 11 o'clock. There's usually a retracement on 11 o'clock. Whatever profits you've made for the day, it tends to make a retracement from 11:30 to 1:30. Wicks are like gaps. Yes, indeed, they are. Inside trade day. So if this is an inside trade day, and this ends up going banging off of these premium discount boxes, you could be boxing all day long, and the 1 minute chart just keeps throwing you off. So you have to be committed to one time frame, use your lower time frame to execute your entry, and then close this sucker down and go here and start trusting your higher time frame. Put your stop loss there and just walk away now and say, if that's where I'm headed, I'm going to go there. And as soon as I break even, I can leave, zero stress, go golfing. You and Derek get together, go for a golf. That's going to be it's on my bucket list, Derek. You're on my bucket list, man. I want to come down there golfing with you. My golfing would be terrible right now. I haven't golfed since before my last, that would have been before like 2 surgeries ago. So my back won't be, I'll be just polo smacking that ball. I used to have a great drive when I was younger. That's very kind of you, Derek. Thank you, sir. We're going to meet up one day. I'm going to go meet Abs this March. I'm excited. Going down to Albuquerque, New Mexico, seeing my buddy Abs, see his son, the Oracle. Do you remember the Oracle, Derek? I called him the Oracle. He gave us a call one day, and I was like, "Oh, look at that! It hit perfectly off his level," and we called him the Oracle. And then he left to go to med school, and then his dad joined us, and we've been friends since. So it's I'm excited to see Abs in March, meet his family, hopefully get to meet his son, and yeah, it's going to be a good time down there. I'm just going because my wife's got her thing on there. So if she has to go do her IB stuff, I'm going to tag along. And if you guys are in the area, let me know. I'll rent a car, come see you. We'll go have a coffee. We'll have dinner if you want. We'll have a chat. I'm excited. Make sure my wife's okay, man. This roads are terrible out there. Yesterday, the Deerfoot was just parking lot with cars all smashed up. And that's Canadians who know how to drive in winter. And that freaking highway was just, in Calgary, was just smucked, just full of cars. So I want to make sure she's okay. I said, you got 30 minutes to let me know you're okay, or I'm getting out the motorcycle. I could not ride my motorcycle out there. I'm kidding. But that's the only other vehicle I got right now. So reversal, Tibbs again, key levels. Change in direction. I love it. 57, so 58 next. Ooh. You got a long off of that, Hadi? You sneaky fella. Where'd you get off that one? You got long? Where did you get long? Oh, I bet you he got long right there. 1034. Oh, 53. You went long in here somewhere. Oh, you broke above this candle. Did you use this candle here to go higher and then take out at the rejection block? Oh, 15 seconds. Okay. 53. Ah, yes, I see you now. I see you. I see you, my friend. I tell you, Hadi's he's got some laser eyes when it comes to these 15-second charts. So, and he's disciplined enough. This is why Hadi makes money in shit days like this as well. So I want to show you where he went in there, so you get to see the benefit of Hadi's, what he's looking for. He's trading the reversal model exactly the same way. So you see this here. You see it trade above. It comes back into this level here. So he's looking for a run higher. He's looking for a run here. And if he's going box to box trading, if he's boxing, he's just doing this. He's going here to here. So if he's inside this range and he goes here and he goes, I'm going to go along right there. Stop loss is sitting down here and I'm reaching for the premium rate right there. He could be out right there. He could be pulling the fib tool and doing 50% there, or he could just be sitting there going, you know what? All the time we use this candle, if we get a body above there, I'm in on this one. We get a retap of that. I'm going long. I'm reaching for this guy here. Comes back, taps it. There's the next price leg higher. Look at the price leg. Bonk. Done. Right on the beezer. So there's one price leg, second price leg done. He sees a reverse, out. He probably took it out, right? The boxing. If he's just boxing right to there, disciplined enough to take 82 to 95, that's 13 handles. 13 handles of profit. Done and dusted. That's super sniping, my friends. Good for you, Hadi. Well done, my friend. Well done. That's all we're doing. That's all we're doing is boxing. Let's look at, stay on the 15-second. That actually looks pretty good. So right here, let's look at this one inside this range here. Practice this, because this is a little bit more advanced stuff, but it'll kind of give you an idea. What the hell is this thing? Sell market. There we go. Look at this range you're in here. You take out this low, you see this reverse right here. And I've told myself I'm not doing any more trades until this thing cleans up. And it's not cleaning up on a 1-minute chart, so I'm not going to touch it today. Maybe this afternoon it'll clean up a bit, but we're looking at non-farm payroll. So if you're not done by today morning, you're done. Let's just look at here. You see this low taken here, the reverse occurs here. Look for the fair value gap, the SIBI that gets taken, not the BISI, the SIBI. And then you wait for a return into this level. See how it goes through here? Does not come back on this candle. This candle now takes out this candle's high. Now this becomes the important one, not this. You can include it and have your stop loss sitting just below it, but This level now becomes the sensitive level that you want to find some support at. So as soon as it comes back into it right here, now pull your fib tool from high to low and say, am I getting it at a premium or a discount? So these are the kind of thought process you have to get into. Am I getting in at a discount? No, you're not. You're getting in at a premium. You have to decide whether or not you want to take that at a premium and run for immediate rebalance. This is called a fair value gap, immediate rebalance right here. That would be the premium level. So unless it comes down into a discount, I'm not aiming for that. But you may say, I'm all right with that. If I can catch that, I'm looking for this and a possible range extension because my overall bias now is going higher. And this next price leg could go higher. So if I'm looking at this run here, retracement, I'm looking for that again to extend from here to here. Now I'm looking for that range to extend. So right from there. So if we look at this here and we say, that's my upside objective. Do you want to pay for that? Up to you. And if as soon as it starts to clear the 50 or 62%, you could say, I'm pulling my fib tool on the way in between and I'm going to pay myself or hit my premium array. Hits a premium array and you're out. You're done a real quick little trade there, right? From 65 to anywhere from 76, so 10 handles to 15 handles. It did not give you the 65 though. It just gave you the order block. Okay, so you've traded back into that candle's open or its close right there. Now you go higher. So now you say, here's my decision. What if this does go higher? What if this is the next price leg higher? Then you say, you do this, you eliminate this. And this is kind of like you rinse and repeat this every single time. This is exactly what I do. I go, I'm looking for this to get broken to the upside and used as support. It breaks to the upside and also takes the high. Then comes back in, finds support at that level. Wick does a little bit of damage, but you're still inside the support. Oh, got a stabber on my back there. Looking for support at that level, and then you look for it to run higher. It runs higher, comes all the way back in, taps it again. You've got the reverse. It goes higher. Now you've got another reverse here. So that was my upside objective. I'd like to see the leg go. You're automatically in profit if the moment you take this and you look for the next high. So here you look for that high, move to break even. Takes that high, pay yourself at the next high, comes back, takes you out. You see a reverse, you go, great, if I can get in on this, I'd go long. You can't. Does it get in on that? Goes long? Nope. Then you see the reverse occurring up here. So now you're out of your trade. That never gets, if you're just following the rules, that never gets hit for you. So you look for the reverse. You don't get in here in a discount, and you don't get in here off this order block for a further premium to take out that high. It runs right through everything. So then you see this starting to form, and you go, am I going to get through here on a close? And there's the discount. So box to box, that's the discount array. So you got literally traded below it and into the box. So not worth your range. Premium, straight down into the discount, right back up into the premium, ran above it. Now you say, I want to see that go higher. And it's waffling around here. Then all of a sudden it trades below it. You go, I'm on the wrong side of this. As soon as it comes back into that range, I'm out. I'm closing my trade off. So you close your trade off at break even, or if you, before it hit that low, you lucked out and got all the way back to the consequent encroachment to close out your trade. It went lower, extended the range. Then you see a new reversal here. Rinse and repeat the same process over again. Watch. We have swung below these lows. Right, we're still inside that big old price leg. Here, you ran below it. Now all of a sudden you run above it. Now you're long again, reaching for this high. You go long. As soon as it takes that high out, move to break even, because you're inside this range now, and you're back to the premium box. So box to box, you go short to long, hit the box, take some of your trade out, move yourself to break even. If it comes back and takes you out, you're out. Okay, stop. And then we see the same thing happen again. We say, does the range, we want to see if this range extends. So you go from box to box to box. And now you say, if I trade above this and then trade back into it, I'd like to see this go higher. Still aiming for up here. As my upside objective for that price leg to finish carrying on, right? So look, see how this body trades above it again? And look at it, came back and hit it with perfection right there. And now you're long again. So you're going long and you're aiming for that high. Pay yourself there, move to break even. As soon as it breaks that high, again, upside objective is up here. So then we just go clickety-click, one candle at a time. Burk, burk, you're out. See, you pay yourself at, oh, you didn't even get that high. Okay, so here you go higher, it comes back, your stop loss. Where's your stop loss? Sitting below this low. Your fail-safe, your stop loss would be, your fail-safe would be below this low here. So if you close below that, then you're coming back into this range again, and you want to make sure that you don't close below here or the mean threshold of that candle. So your stop loss is here for an immediate whip back, but your fail-safe is, you're looking at whatever imbalance we get the moment we take out these little highs like this. If there's a fair value gap in there, and there's a little tiny guy right there, if we trade through it, we're on the wrong side. We're looking to run back into the range. Your fib tool, again, goes from low to high. Often trade into reversals right off the top of this here. So if you're willing to endure all of that, your stop loss is sitting here, fail safe would be here. It would have come back and took you out, or took your fail safe, and you would have gone, I'm on the wrong side of this. I'm out. The candle closes and you're definitely too low. Move to the sidelines, take a loss. You got new information. Wait. It's either coming back to retrace into here and go back higher. We don't want to marry this idea until we see something that confirms we're going higher. So I want to see this level and that level get taken to the upside. So you do the next little clickety click. There's the mean threshold. That's it. That's your line in the sand. Otherwise, we're looking for another run down into the discount box. Premium, discount. So we have another run into the discount. There's the discount box. Hit right there. Now, do we march through it, or do we start going higher? So watch. We're through it, came back into it. So now we're looking for this mean threshold here, rejection block, old low. Mean threshold, came back up. Now this is that whole waffling thing we were talking about earlier this morning. Came back, so the mean threshold held. Back through the premium box again, and that little tiny one sitting in there. Watch that. Retrace back down into, we have a breaker here. This order block, I'd like to see this hold price here now, this breaker. Reclaim this and go higher. Reclaimed. Now also back to this breaker here, so we're inside these two. Mean threshold's gone. We traded on the other side of this one, on the wrong side of it. Aiming for that low, mean threshold again, and low, or rejection block. Rejection block. Back through that level. Watch this level here. See how these premium and discount arrays just keep getting smacked. So here, now you're above it. Now you want to see that continue going higher. Using this order block for support. Again, it's the same rule. And every time it gets broken, you think range extension changes up on you and goes, nope, I'm back on the wrong side of that. That's why you can get beat up in these consolidations really bad. Support here. Support, support. Keep pushing higher. Look for a run here, and eventually look up here at 21,621. Come back, find support at the top of the order blocks. Look for a potential reversal right here. We don't want to see this low get taken on the downside, otherwise we're coming back into 50% or more of that range. 50% more range. %. There you go. We drop below it. Come into 50% or more of the range. You hit it. And now you want to see if we can get back through here. Get back through here. Body closes above it. That's great. Want to see a continuation to the upside, and you want to see if we come back into this level right here. Highs taken, pay yourself at the high. Right back inside it right there. Look for that high to get taken, pay yourself at that one. This is the support you want to see hold for a bit. Highs taken, pay yourself. That level's still providing support now. And you're always looking for the next reversal up here. Still aiming for 621. 621 hit. That price leg completed. Now you look for a reversal. You got one here. Didn't take out an old high though. So not a strong reversal for me, just a change in direction. Coming back into here, discount array sitting right in here. There to there. Look for a run into that level. Bang, right through it. Nice. Okay. So there's your, that's how you look, that's how you kind of rinse and repeat it over. And you saw a couple of times I got knocked off here. You just say, okay, I'm on the wrong side of that. Yeah, I'm getting beat up. How do you stay on top of it? Yeah, 50% or more of the range. Got that. Reverse. We didn't call this reverse right here, but it's right there. It came all the way back, hit it, then went higher, got through that level. What was this level we call? Oh yeah, this is the next one. You didn't get in here, went higher, hit our objective. Waiting for any reversal now. As soon as that objective is hit, waiting for the reversal, and you got the reverse here. Broke market structure to the downside. Here, came back in, tapped it right there for a short. And now you want to see if we get through that level again. It did. It just ripped all the way through here down to your discount array. Sitting right here. Let me get that out of there. Remove. Remove. So boxing inside that range. From, if you don't catch this one, watch for the break in structure. There's the break in structure. If you return back into that order block, you catch it for a short, you're going to go from premium array, all this little box you see here. So think about the range that you're in. So you got premium starts way up there to there. So you're in here, premium to discount. That's not a, yeah, that's the busy side. So premium to discount, it literally rips right through you. So you make all your money here and quickly brings you back into a lower discount inside this whole range here to here. And that's where you're sitting right now. Odds and your regular trading hours gap. Look at that. That's a super choppy day. Like, holy smokes. Now watch, see if this comes back, gives this a little kiss. And you want to see if that's going to come lower now. And we're going to come all the way back down to here. Try to get it out there quick. But that was the discount one right here. And that comes all the way down to the lower half right there. You could even, yeah, I like that one. That's the lowest one right there. So I'll go with that one. That's boxing from here. You caught the reversal, market structure break, tap, first level, second level, third level. See how that one gets tapped? Ran right through it into this one. You come all the way back up to this one again, and then use that to go lower, take out that low, run for the discount one for the next level. As you range extend each time, you keep looking for the next one down, next one down. So now I'm going to see if that runs deeper now into, take out the lows. I'm looking for 21,541. 21,541 right here. So we get down to there. Gotta go close. Gotta get, well, we got the close of Tuesday, so I'm done for now. Kind of late, but I'll take it. Breakfast time for the kid. Good for you. Is the dot indicator available with TradingView? No, I don't think it is. This was just a private one I had made with, it is shared, I think, somewhere in the history of our Telegram channel. You'll have to go back in there and look for it. I have no idea where it is. But yeah, that's where you'll find it. If it's still there and available. It's got little kinks in it. I want to see the dots actually forming on the high and the low. And I know Tristan did fix that. But I wasn't able to get for some reason I couldn't get access to it. But he has like little triangles that go above, and so he did a great job of making us that. But I just got the old version. I don't have the newest one. My downside objectives in my shite. Money penny. I have it in my shite. Come on, give me some love here. Hit my objective, damn you. That's the next one. There's one just below us that I didn't mark out. No, that's it. What am I on there? 15. Ah, that's a 15-second chart. I'm looking at the 1 minute chart. The 1 minute chart starts at, it's already in the 1 minute chart at 567 to 560. Look at the 1 minute chart here. You'll see it right there. That's the discount array from box to box inside this range now. So you got to get through this to aim for the next box. And you're already inside that, right at near the consequent encroachment of that. So if a D's looking for a reversal, look at that. I never thought I'd ever be on TV, hey? Unless you see the movie I was in. And I was just a cop, so you have to look inside. I was a New York cop. Oh, I better stand up. Jabbers going on there. Derek's got me in on his TV. That's funny. Eating breakfast listening to the Big D. Put my table up. We're going up in the world, Derek. Rise, my friends, rise. D's looking for a long, hey? Inversion. Find support off of here. Here. That holds price right there. Oh, I'm getting some jabbers going on in my back. I don't know how much longer I got with you guys. Oh. We got reversals happening like crazy here inside this range. I got nothing down here. You need this to hold price right here. Get back through this lot, not just use this to support to come lower. There you go. I got you, Hadi. I got along on that with you. I went back off of this order block here, so I'm kind of hoping that holds price. That's got me in, so I'm moving to break even now. Look at 50% of that range. Ooh, there's a nice little run. That's a fill of the fair value gap. So pay yourself there. On a 1 minute chart, that's a fill of the fair value gap. So let's see if we can get above this. You want to see this stay open? Look for a deeper run, so watch for the premium array now. If you can get through this, you want to see this accelerate quickly through here now. And we're aiming for this premium array up here. This is a box-to-box trade. Inversion all the way from here. So let me get rid of this guy here. Put this one on here so you guys can see that one. This is the run to here. Now you want to see this hold and accelerate through here and run for the next level. So if it comes down into here, look for the next price leg higher into that range. And I guess that can include this piece right here. So we're looking up there. That'll be it. The last box to box round, that'll recoup some of the loss I took on those other couple of trades this morning. My stop loss is sitting just down here. I like to see that provide support now. See how these holes in the walls are now at levels you want to see if we can provide support on, and you're climbing the rock wall now. Accelerate through here. You don't want to be messing around. There's nothing, this has been worked like crazy, so you want to see this level and this level. Quickly accelerate through here and use them for support to go higher. So looking for the premium box. Yeah, partial risk free. Hadi, you're so nimble. Love it. Nimble. So now move your stop loss up to profit. It's a little higher, and watch for that premium box to get hit. And then we all slap high five with Hadi as soon as we hit our premium box. High five, Hadi. There's box to box trading, folks, live. So now I've moved my stop loss right up into here now. So I'm not taking any losses. This is all profit from here to here. And now we want to see if we get a trade through that box on a close right there. And this guy, this little imbalance you see right here, that's the highest portion. So I'm moving my stop loss just a tad bit higher. I'm just underneath this one here now. That's a run. That's a wrap. Look at that. Now you want to see if this holds price. You don't want to see it come back. I'm out. There you go, box to box trading, my friends. ID's out as well. Did you guys catch that? That was a nice 574 to 620. So there's 50 handles there. 50 handles, run. That's delicious. And that's right up inside that box right there. Um, 25 handles, but on demo, lost confidence from earlier long loss. See, now that's interesting. Document that, Russell. You need to document that. You need to say, where did I... So see how we're breaking above this now? We came back inside this. Now you're breaking above it. Let's see if we come back and find support at that to go higher. I'll watch for this high to get taken, the range extension. Now, don't forget you're paying a real premium here for this to run higher. And you're hitting the top of the hourly fair value gap premium again. So now you want to see this go up and through here. So yeah, you need to screen capture that, Russell, and write in the document the psychology of what you were missing and how you felt in there and where that began. because right now you're going to focus on, I missed out. You see how you, just how you phrase that is, I missed out on that because of my fear. And so what you're doing is you're actually recognizing and ingraining into your neurology that I took a loss before, therefore, whatever I pick now is because I'm not good at what I'm doing. So you've got that negative mindset. So you're focusing, you draw your attention on what you focus on is what you get more of. So the more you think to yourself, I'm still holding on to that old trade. I'm bad. I'm missing this. I'm not getting this. I'm not getting this. And then when you finally get into trade, that fear literally consumes you and you get out because you start to see the dollar signs there starting to go up and you go, I'm out. And that's what's influencing you. And the fear is influencing you instead of, this is a sound logical entry. I have a sound logical exit that I want to go for. And then I'm done. And then I'm done. And then trust that it's going to go. And if it doesn't, don't put that, you shouldn't be hitting this buy and sell button, especially if you've got that fear running rampant through your body right now. Because you're trading on the wrong, you're trading under the influence of emotions, especially negative ones that you continue to hold on to. So, yeah. So that one only extended, it didn't take out that high. Oh, look at that. Literally turned on the 32. So here's the Crazy Ivan look back. We've got a small reversal here, mean threshold. If we take this side out on the downside and use this candle here for support to come lower, you're coming back into that range again. And that was your high. So we're looking for those. Do we have a reversal here? Are we going to come back into this range all over again? So wait, look for the reversal now. Or if a low gets taken, like this guy here, and you got a small fair value gap here, we've traded above it, tap it. Now you want to see it get through mean threshold and keep going higher. Yep, very frustrating, hard to conquer brain stuff. It is hard to conquer, but the first way you got to do it, my friend, is start focusing on positives, not the negatives. I know it's easier said than done, but you really do have to focus on the positive and let the emotional stuff go. When you're in the trade, take some deep breaths, focus on where you want to go, and just watch price action. Because if you're running on adrenaline, you're just feeling that rush. It's all dopamine, man, and cortisol. You cannot live on dopamine and cortisol, especially cortisol. Your body hates having stress hormone in it for too long. There's the high taken now. See how we stayed inside that premium array there? We did not trade below the premium array. We traded back into it. So it's all legitimate from here all the way down to here. That's all acceptable for continuation to the upside. Look at the 1 hour chart, D. 1 hour chart. Yeah, we're right up here. We've came back into this order block here. We're through this. As soon as we get through this level right here, there's the next array. This is also a premium array inside that larger range. So as soon as we get through here, I want to see if these two order blocks, relative equal highs, get taken here. And there's your continuation right there. This is a continuation. The moment you broke through that, you come back inside this for continuation. This potential price leg you see here now looks higher. So this can go much, much higher. I'd like to see it take out that high there now. These highs here. So if we look at this price leg here. This would be a great one for Derek's where is that? Well, look at that. It puts us right on top of these highs again, these equal highs. And you don't want to see it get below here now. Find support at the top of that. Did I mess with that one? I think I did. Ignore that. Just this old high here is fine. So the next price leg, so even if you do this and do your fib extension tool, the 2 to 2.5, I don't know if Derek would take this one as a 2.5, but for me, that's a nice decent retracement for a swing higher. So if I go bullish, I don't know why I get this bullish bearish one on my settings messed up. Price reverse. Save as fib bullish, save. Okay. There's 2. There's 3 right on the beezer. Right on the beezer is 3 extensions, 3 standard deviations. This whole thing here would end up being 3 standard deviations to that point there. So that's my upside objective, my friends. I'm long on this, and I'm going to move to break even. And we're going to let that run. See if I can get to my upside objective here. Came back and got me. That's a good logical place for price to come back to. And look for this high here. Um, 5 minute, would you look, waiting for MS at 50% of the range, would you look at crude oil? Yes, I would, sir. I certainly will. Stand by. Crude oil. Traded through here, lower, rejection block. Look for the 50% of that. So 79.40, 70.94. Look for this old guy here. So 70.94 put you right back in Tuesdays for fair value gap here. So look for a reclaim of that. That would be the downside objective I'd be looking for oil right now. So far, you still have this reversal right there. So I wouldn't want to see it. If you're shorting it, I want to see this hold and this keep coming to here. Is that okay for you? Fabio, do you trade Thursday and Friday of NFP week? Sometimes, like I'm trading now. So if I see a nice clean setup, then I'll take it. If it meets the rules, then I'll take it. If it doesn't, I won't. And Friday, I don't trade non-farm payroll till after non-farm payroll has been announced. Let it settle for a bit, and then see if there you go. It hits it. That's hit it right there. I wait for the non-farm payroll rule of Friday to end. So as soon as the news is over, then I move to the sidelines or wait on the sidelines till the news is over. Then when you see the market clean up a little bit, then you can start like 15 minutes after the NFP has been released, start looking for your setup. So that's what I do on a Friday, Fabio. And sometimes I wait till the afternoon because sometimes you can get some really nice Friday glass offs. In hang gliding, we call it glassing off, when you can catch it the end of the day after it's been a hot day. If you jump off a mountain with a hang glider, of course, at the end of a day of a hot day, that just before sunset, you want to go fly for about an hour, you can catch the heat of the day. It's just the whole ground is hot and it's just a smooth air you can just float around in, and it's called a glass off. Look at that, right to the beezer. Bing, just hit it nicely right there. See that? Right, perfect. So now I want to see it get back through here and then see if we can get back on top of this and start to break market structure and see if you can get back into that range again. Yeah, so I don't know what that reference was there. Yeah, so so the February, the afternoon. So Friday in the afternoon, you catch this little glass off where the market just steadily, kind of slowly moves towards an objective in the afternoon. So I like that. I'm back to break even again on this trade. I'm going at this one more time on my NQ. Still looking for that upside objective there. I like this pop up above here, find some support, go higher. So see if you can get some I don't want to see it roll over and come back down into this level again. Now I want to see that stay open, create a breakaway gap, keep coming up higher. You can tap an old high. That's already done that already. We ran above it, tap the old high, keep going, stop these little dick around candles, get up there. So it's a zero stress trade. So right now I'm not worried. It can come ripping back against me. I don't care. It's at a profit. It's in profit, and I have an upside objective. So if it comes back and takes me out, I'm done. It's not a huge deal. So that's the answer for you there, Fabio. D21,695. Yeah, I've got 21,685. That's just the yeah, it got me. So if it comes back into here, oh, it literally stopped right on it. That's another entry right there. I didn't take it, so we'll see if it goes. If it gets above here again, then stop loss will be here, looking at that level there. And I'm not going to take any more. I've made back the profits or some of the losses I took this morning. I recouped some of the money I made today, so I'm going to sit quite content at that, and we'll see if we're. Now it's just a matter of letting it march, and I don't care if I'd like to see it get up there just for the sake of curiosity. Now, let's see if we can get into these equal highs again, and it would be awesome if it just froze right there and then turned around and came back down again. It does not give you the full closure, it just gives you the rejection block and stops right there. Look for a pullback to 50% of the range for a long. Wow, you long again? Perfect. You being so calm is so soothing. I aspire to that level of calmness while watching price trade. You'll get there, Erica. Once you see this and you trust the price action study enough, if you've watched this price action cleanly enough and you can stay on the horse, you say, here's my entry, here's my exit. My fail safe is the minimal loss, not my predetermined loss. Because when you set your trade plan, you want to make sure that you've got the leverage that you want to use. Your plan is set, and if the leverage is 1% of my account or 1/4% of my account at the stop loss, and your fail-safe saves even more of that, then you're like, oh, I just paid this little piece of information because I know it's going to turn at that point. Now you got to get a level of confidence that says it's going to turn right there. And if you study price action enough for with us, you'll see, and we're calling freaking solid levels here. Look at that, like right there. Like there was another entry right there. I didn't take it, but whatever. But we talked about right as this happening. And look at that, right on a 45, right on a Tibbs as well. Tibbs at a perfect level. Have a nice day. And now as soon as it breaks this high, move your stop loss to break even your zero stress. And you're like, oh, whatever. Let it do what it wants. So then start looking over here for a fail safe. If you guys don't have fail safes, go study my fail safe video because you need to understand fail safe versus stop loss. People put stop losses there. It comes ripping back and go, oh, I got hit out. Well, you didn't need to. You should have been paying yourself at the next level, above an old high, or at a mean threshold. You should be paying yourself, or rejection block. You should be paying yourself and then moving your stop loss accordingly. If you're a stop loss chaser, if you're like Michael and he can put it in here and he doesn't care that you get these little retracements. He doesn't care about that stuff. He knows his objective and he reaches it. We're not that level of genius yet, but we'll get there. We'll get there. Abs, good morning. Had no internet this morning. What? Abs? We're all excited. We're talking about you this morning. Coming to meet you. My wife and I are going to get to meet up with Abs and his wife. It's going to be awesome fun. You're probably almost ready to call it a day. Yeah, I've had a couple of little jabbers here today. I'm just kind of hanging around here because I want to see it hit my objective. Sorry you didn't have internet, buddy. Last couple of Fridays were amazing for TGIFs. They were very good. Exactly, Fabio. Hadi, lovely. Going to our target. Erica, like so many others, I've got to become process-oriented rather than outcome-oriented. Very well said, my dear. Very well said. Beautiful market maker buy week. How do you like 21,965 final objective for the week? Ooh, Fabio, 21. There you go. Come on, hit it. Yeah, let's get that price leg finished. That's like a perfect price leg finish. Come on. Ooh, yeah. Now let's get our finally hit it. Now look at this one, 702. So we hit that objective. Now the next one is this one, a 4-banger. See, it just came back and took me out. My stop loss should have been sitting down here. Yeah, whatever. Even if I would have put it below 1 tick, which I typically do, my rule is I put it 1 tick below the breaker that takes the run. Even that would have been fine and kept me in. Look at that. Right there, would have 1 tick below, would have just came back, gave me a little squeeze, and we would have been more than making up. We would have made back a chunk of change today. And then you're looking for a 4-banger now. A 4-banger swing. Come on, Hadi, hit your 695, buddy. Let's hit the 695. Hadi, let's get Hadi a carrot here. Hadi. Oh yeah, 695 is done, Hadi. There you go. Let's get the 4-banger now. $6.95. Hadi hits a 695. Takes out the highs. Lovely. Hit the 4-banger. Come on. You know you want it. You know you want it. So Fabio was saying, what level you're looking for? Fabio was saying 21,963. Look at that 4-banger. Ka-ching! Rocking the carrot. Rocking the carrot. Love it. Anyway. Carrot and a stick, my friends. Carrot and a stick. There's the 4-banger. Looking for, what were you saying? Sorry again. 21,963. 21,963. Let's go to 21,963. 21,963. Where the hell's that? We have to go to a day chart here. Ah, 21,963. I would say 21,784 to 21,867. 21,953. You could make it all the way up to these equal highs again now. Now that we've swept this, we're back into here. I want to see it get through here first on a close, then here on a close. Then I start getting excited about marching for the next premium array. But we got to get above here. We got to get above 21,867. If we can get above 21,867 on a close, I'm looking for a retracement back into this level and then a run higher. Or, depending on how we act in here, this level right here becomes important for me. So this low, 21,683. That'll be tomorrow's kind of, we'll see what non-farm payroll does. And as non-farm payroll settles out, I'll be looking at this candle for some really important levels. But yes, you're absolutely right, Fabio. We could be running that high. There's a lot of PD arrays that have to come into play before we reach that, but that would be a nice downside or an upside objective. On a daily chart, there's too many PD arrays that would give me a pause before I reach that as an upside objective. You could bang off of multiple different arrays in here and get another wick. And you've got all this down here. You got all this imbalance here, and you've got imbalance there. So, and this in this range, you could quite easily end the weekend at 50% of that range. 1, 2, 3. I want to see it really start to get back up and pull a Friday into here. Let's do this. Let's try to reverse engineer some crazy crap here. Right there. If we come back up into this array, take this out here, hit the mean threshold of this candle, and have a pullback in the week, right back into this level, right back into that schmucking mess. That would be my, I'll leave it there, because that feels good to me. Just to look at that, I want to see if that, we take this high out just enough to take it out, and then pull back into a Friday's 20 to 30% of the range, then that would put us right in the middle of this cluster here and back into that candle again. 30% will put me right on that level I was just mentioning. So that's how I would kind of reverse engineer that. Not that you should take that as gospel, because really it's not nothing until proven otherwise. Looking for a short. Thanks, D. You're welcome, Craig. You're welcome, buddy. I'd like a nice short off of here as well, Hadi. I'd like to take a nice little run back down into here. See if we got a little reverse here, market structure break on a 55, 58 is right. Oh, this is a 15-second chart. We haven't got a 58 yet. Look at that. Trade below it. You come back up inside it. Just tap it right there. Now I want to see that come shorter. But I want to see a structure break with it too. Otherwise, I'm not happy with that just yet. Looking for a body to get below here now. The 8. It does not get below there. Look for the high here now for an extension. You're looking for that to go higher. Look for a retracement back into here now. I like this little level right here. And that order block. There's a retap of the high. A retap of the order block. In threshold. See if we can get down and tap this here, which would be putting you at 50%. It'd be like a discount range inside here. Oh, we hit equilibrium already. Okay, well, I'm already long there anyway, so I'm just moving to break even. Just let that rock now. So you see how that was a nice little retracement back into that order block? Literally tapped it. I got short or long just in up on the top of this one here. So I want to see if that keeps rocking higher now. And now I'm moving into break even. Well, I'm already break even, so I'm just going to move it into profit now. And or let it run. Doesn't matter if it comes back and takes me out again. I'm good. I want to see if that stays open now. A portion of that. And that right there would be consequent encroachment of that. So if we tap this and start going higher, or just this institutional order flow entry drill for a continuation to the upside. So, yeah, trade's on, no stress, no worries. Let it do what it wants now. So now the upside objective will be on the daily, on the hourly level. What am I looking for on the hourly? Hourly, I'm looking for 812, 785 to 812. 785 to 812, 785. Right here. That's my next upside objective. I got to run. I look forward to rewatching this evening. I know nuggets were shared that I missed and went over my head. Thank you. You're very welcome, Erica. Russell, wow. Risk free. Going wild, ain't it? Out. Yeah, I'm sitting at a zero stress trade right now, so I'm just letting her do a thing. I'm gonna sit right there. Right there. Let's see if she goes, or if she comes back and gives me a little kiss before leaving. I want to just wave at my kid on the bus. Go, kid, go. You're out already? Russell, busy higher. Yeah, I'm looking for higher for sure. I'm looking for the premium level in the hourly. Look over here. Now I'm trying to finish off a box to box here now, right? See this box right here and this breaker. No, yeah, it could be a breaker. Takes out this little high here. So I'm looking for this level here to that level there for it to run up into here. Which will put me right at the overlap of these two here as well. But don't forget, we could see this next hour come back down during lunch hour and retap these highs. So you could see this dip right down into here. So now my stop loss is sitting right there. So my stop loss is tight on this, just because I don't know if we're just going to reach into here. We've already filled this fair value gap. I like that as a tap. And then we're starting to march through it. So I do like the idea of running through that. Looking at 751 as the start of this whole big breaker here. That candle and those candles make a breaker. Or no, I guess a breaker that takes out these lows. So I'm definitely in profit now. So I'll just let that sit there now and run. We'll see if we can't get any higher. 15 seconds chart is what I'm on. So I caught this reverse into here. And my stop loss is sitting right there. I don't want to see it come back into this level here. And there's a small reverse, change of direction here. So when you're this tight on a 15-second chart, any reversal could take out some profits. So I'm not prepared to give those up. So I've got that's my swing. I don't want this to turn into a cam model 3 entry where this now becomes a break below this and we use 1, 2, and a third to go lower. So that's my fail-safe idea. Otherwise, this is beautiful for a reverse, trade back into displacement, trade back into consolidation, cam 1 for continuation to the upside. So I just want to see that keep marching up there. So 751 is I think the next upside. And then we had the carrot sitting up. Where did we have the carrot? On a 1-minute chart? Where was the carrot? Do we not have a carrot in here? I thought I had a carrot in there. You have that marked at 800. Yeah, it's inside this little overlap here. I'd be happy with an 800 as well, Hadi. It's coming back. Gonna give me a little squeeze here. I want to see that stay open. This order block, I want to see that hold price now. It's open at 727. all the way into 726. I want to see that hold. That's my little pin trade, my little linchpin holder of my trade right now. Yeah, see, that's the problem with this one. It can come back because we got this fair value gap here. We could literally come back next hour during lunch hour, come back and retap this, and that would give me a nice little another new price leg. This price leg here would go higher. So look at this here. I'm kind of trying to anticipate this happening now, right? So if we get a run to, let's say here, and then we get a retracement back into that candle's high. Look at that, how it runs right to that mean threshold and that daily price imbalance again. So if we hit this level right here, I'm moving my stop loss up right now just because this could be turning on me. So I like this idea right here of tapping that, come back, and that would be my reversal. Like a reverse during lunch hour to 1:30, and then you see continuation on the upside. I'm still in it, so if it continues to go and this doesn't manifest, then that seems like a nice logical place for me to aim for, to take out these highs, and that's at 986. So that brings you right back into that number that Fabio was mentioning earlier. That'd be crazy. That's a 1 hour chart though. And this may not manifest till next week, but hey, look what we've accomplished today. So that's definitely doable tomorrow. Moving more profit. Let's go back into, so anyway, that's the idea I'm kind of looking for in terms of trying to engineer something. Look at that trade from here this morning, or from that 11:30, taking out that high. Ah, dang. Stop loss would have been sitting there. It would have been a nice little, that would have been a 100 handles, 120 handles. This is going to take me out. It is literally tapping on my stop loss. It literally was sitting on my stop loss that did not take me out there. My stop loss is literally right on that sucker right there. So just below that mean threshold of that candle. I'm surprised it did not take me out. We're getting into that 12 o'clock reversal time. We're not at 12 o'clock, this thing here, you'd want to see this reverse, take out this low, and then start pushing back for the lunch hour. The fact that we're still climbing up here is a positive for me. I like to see that. And my stop loss is literally probably like another half tick below this low here. I thought for sure that was going to take me, but it didn't. So, yeah. Off this high, stop loss is sitting here. And come on. That looks like it wants to pump it. Stretch this out a bit here and look at the candles. See that little imbalance right there? Traded below it. Should range extend now. We've traded below that little imbalance. Tap it. Now I'm going to close out my trade quick. I'm out because that one is going lower. See that? Range extension. Trade below it, pops into it, and now there's the range. It would have taken me out there. So that's it. I'm done. Darren, may I ask you to talk about the stop loss and when you move it to break even? Looking for a short. Yes, that's exactly what you're looking for, Hadi. This could be that reversal we're looking for now. Get down in there. Come on. I want to see this downside get taken. This come through here, use this inversion to go lower. So usually, Hadi, what I do is my fail safe, as soon as I break a high, especially if I've only got one micro on or something like that, and I can't scale out anything, then I will instantly look for my fail-safe. My fail-safe becomes my stop loss when the next fail-safe is produced. Does that make sense? So my stop loss stays at a stop loss, my fail-safe stays here, and if I drop down at a new fail-safe point where I say it could reverse here, my stop loss moves to the previous one, and this new fail-safe becomes my new fail-safe. Does that make sense? But you got to understand fail safes, and you got to know, you got to believe in them. Otherwise, then they're not going to do you any good. But you understand price action well enough, Hadi, that if you do have a fail safe, it's based on your knowledge right now of the price action model that we're using, which is those inversions and those key points. So you go, I'm going to go short here. That's where your fail safe or your stop loss goes just above that. And the moment the next one says, I'm aiming for 50%, use your fib tool retracement to move your stop. There's several different ways, but I use my fail safe as my marker because I know if it turns there, I'm on the wrong side of this, and I'm not paying the stop loss to realize something that I can see on the fail safe. This doesn't work out. I'm out of here. Glad my girl is safe. Oops, sorry. Didn't mean to smash you guys with my phone. So you see how we had a break below the low here? A tap. I'd like to see that come lower now. Define gravity. I don't know why I have that. Look to the western skies. So fail safe now moves to here. I don't want to see it come back through that. So it's the trade is on. We broke the low. Fail safe was moved to, or my break even is now break even, and I'm short on that. And I'm just going to move to profit and let it ride now. And now we've run below that low, so you got to look for this right here. If you can stay below, see how we've traded below this, come back up, grab it, run through here, look for that order blocks mean threshold to get taken. I'm in profit, so zero stress. Zero stress. And you catch this, we called this, I want to see it break that low. It did, displace below it, came back, found support at that, get short there. Stop loss is sitting right above here. I don't want to see the mean threshold get taken again. If it does, it'll take me out. Who cares? Make a debate for the trade. Literally freezing on it. It's going to take me. I'm just going to go to break even. This order block here. You want to see that hold. This is the important thing. I don't want to see that wick get taken. Its mean threshold get taken now. I'm literally sitting right here. Hit balls. I'm gonna screen capture that and show you right where my stop loss was sitting, so you guys can see that was look at that. It was sitting right there. So now it's butt up right against that high. I'm looking for a first level, and I've only got a small micro on there anyway, so if it comes back and takes me out, because now I don't want to see that high get taken again, because now we've got this low's taken, reversal. If it takes that high, then we got to reverse into here. We could come back into that range. There's my fail safe, right? And that this one here, you want to see this one remain to go lower. You don't want to see it become higher, and you want to see this one remain to go lower. That's the support to go lower, and this one's the support to go higher. So my stop loss is sitting here. That's my fail. So that's why I'm trailing my stop loss behind it, because it fails for me if I break that to the upside. If I come back into this one for a short, then it's maintaining what I want it to do. So it's acting the way I want it to act. I'm not going to react to this. I want it to be trading my way. And if it rips through me, fine. I make a bit of profit and I move to the sidelines. It's lunchtime. So I'm anticipating it can do some crazy shit with me. And it's non-farm payroll week. So right there, it just took me out. So you make a little bit of profit. It took that high out. So now I'm back into this range. And you see, I don't want to have a stop loss sitting back here at my entry point. Otherwise, all of that's eroded profit. And it showed me that it was breaking market structure right here on a close. So now I want to see if this holds price and goes higher. That's a 15-second chart. And if it trades below it again and takes out that low on a close, then we're looking for a range extension, looking for a run back down into here. So look, smack right off the edge of it, trades below it, keeps coming lower. That's my failsafe, and I'm okay with that. Like that served me so many times, even though it came back and said that's a logical level to trade back into 50% of this small little range it's just created right there. Traded back into 62% probably, whatever. Let's have a look and see if that was 62. Yeah, 62% on the money. So I didn't think about it from the fib perspective. I just looked at this and didn't like, if I trade above that, then I'm going higher. It does, comes into that and then quickly reverses on you. So now you can get back in sync with the market and go short again. Trade it off of here. Now you want to see it take out that low, which it did. Now you want to see it keep coming lower. So you get back in sync with the market again and continue going lower. And if it gets back through that level, your stop loss is here. If it gets back through this level right here on the upside, then you're looking for a run higher. So I'm short on this again, back in sync with the market to go lower. And I'm at break even. So now it's taken out lows. It's closed this fair value gap. So now I'm at break even. I just want to see it continue ripping through. I don't want to see it keep coming back, getting these wicks, choppy wicks that take me out. That's fine. Like that wick just broke even. So cost of the trade, paid for the cost of the trade. And it didn't keep coming the way I wanted it to. It was filled that fair value gap. So I quickly moved to break even because it could be just simply here. And it came down and filled that one. Now it says I've done my job. I've come all the way back down to this discount. It's not a SIBI, but it is a fill of the fair value gap here. So now are we going to get a reversal? So it'd have to get above here for me to get excited about breaking structure return. If this goes below this level again, and this candle is used for support, and this fair value gap is used to
push the price below this level, then we're starting to get into some fun running again, right? We're getting into that market maker sell model. Got it short, love it, out, not out, partial move, break even, got it out. Thank you, Darren. Very nice day. Do you understand how that works now, Hadi? So you can see how you start to use the knowledge that you have about fail-safe as a means to protect your profits now, not so much protecting your losses. Changing your mindset, you start using fail-safe as my means to protect my profits as best I can, because you start to really tighten in on your knowledge of price action. And when you understand that price action and you get really tight with it, you trail that stop loss, it comes back and hits you. You go, okay, yeah, sometimes it's going to wake up like that and take me out. But if this reverses now, if you see that reverse and come all the way back through here, and I paid myself on the way down, these little tiny nibbles, I'm okay with eating cheese, man. Look at that. See, it's come all the way back, and I nibbled all the way down there. And I just saw the trade. It's not over trading. It's like I saw it hit my objective or hit my trade entry, so I took it. It hit an objective. You pay yourself. I can't, so I have to trail my stop loss accordingly, because it could reverse on you, and it literally reversed. I've got nothing here for a major reversal yet, except that order block. When you get on top of it, come back, find support. Now you're back inside this range, and you're looking at your premium portion way up here. There's a small little imbalance right there, so that would be my discount array inside this range here to here, right there to there. See, there's the discount. That's in a discount range. So the moment we break above it here, come back into it, you could go along there to the premium. So box to box trading inside this small little range. And if you get above this, it's a rinse and repeat. You go above, you look for that order block, find support, and you look for your next premium array above you. It's a rinse and repeat over and over, guys. You're doing great, Hadi. Man, you're gonna stellar killer, man. You just look at that, right to that premium array fill. Bang. That's really being quick and sharp and staying on price action. Hit your premium array, you're out. So you collected on the way down, you saw the entry, you took it on the way up to the premium, you paid yourself at premium, you wait for this to take this low out. If it takes the low out, look for that for a return back into this discount array again. Would actually be, yeah, below 50%. So from here, you already dropped below the 50%. So you're inside this guy here. So I'd like to see that kind of reach into here one more time and see what kind of response we get from there. Then if you can get back above this level, look for a continuation. This would be the next price leg higher. Oops. Watch right here. So if I put my fib tool on that, we can reverse engineer this right there. That should bring us right back into this consolidation, take us to this new fib in here. So let's take that right there. Not quite hit it yet. And if it doesn't, then look for that level like that. That will bring you into, oh yeah, right there. I didn't see that one. Premium, your next premium box above you. Let's see if we get into that. Tap this. Now you want to see it go higher. See, we're above it. We might tap that guy one more time. Nope, you're through it now. So you're on the wrong side of that. Unless you get above it again. You're above it. Now you're below it. Using this order block here. Trade above, below, order block, to breaker. You're breaker to breaker trading right now. Get through here, use this for support to go higher. That would put that one at you're above it. So I'm long right there. Stop loss is break even now. We broke an old high. I want to see this now. A body get above here and use this candle for support to come higher. This could revisit here. I don't want to see, I'd like to see that stay open, start pushing higher, but my stop, I moved my stop back down here now. I'm dicking around during lunch hour, which I shouldn't be. I'm just trying to trade. I'm trying to force myself to trade like with my eyes, like really focus on my levels and then try to trade them and stay tight to them and see if they work. And how quickly it could come back against me, and I'm going to quickly move stops and see. I should have stepped my yeah, it got me. So I was looking for this to go higher, get into here, that level to hold price. It came back, tapped it, and this one here, my stop loss was just below there, so it got me right away before my stop. I didn't want this low. I wanted my fail safe, near the mean threshold of this candle. I did not want to see it pop through that, and it literally grabbed me right there. So, all right, so that's good. No, I'm not. Now I'm stopping because we're in lunch hour, and you're going to get beat up in here. And I just got beat up on that one, looking for that level, and it quickly slammed through and took me out. And my entry was right here. So stop loss tight, fail safe worked. It would have swept me and took the low if my stop loss was sitting there. So, oh, someone's at the door. Stand by. Good day. How are you?
Great.
I'll let you know when you get out there. That's so.
I have for Carly. I just need a signature. Are you Derek? Okay, so what's your name? Oh yeah, I just parked in the middle. You know what? Today doesn't feel as cold.
It's like, what is it? Minus 24 out there?
Well, my car's 21. Oh, it's really chilly. It's really sunny today.
What's the road looking like?
I don't know. I just keep talking. Yeah, it's all good.
Thank you very much.
Have a good day.
You too. Oh, our pass first here.
Oh, yeah.
My DNA stuff is here. Okay. Finally, I've been waiting for this stuff. I got a bunch of, I bought a whole bunch of these things. And I'm a firm believer in this stuff. So NMM, nicotinamide mononucleotide. You want to go, David Sinclair, look his stuff up. look at the research they're doing with NMN, nicotinamide mononucleotide. This helps DNA repair. And you do this with fasting, do it with cold plunging if you want, all that kind of stuff. And it is awesome. I gave it to my dad. He's in his 80s and he has macular degeneration, and they can't figure out why. He's got parts of his eye are healing, and they're like, you don't see that. I don't understand what's going on. And I said to him, it's NMN, man. He goes, no, it's this other vitamins I'm taking. I said, no, it's not. I swear to God, it's that other stuff. And I just went and had my eye exam yesterday. I left here to go get my eyes done. And I have prescription long distance in both of my eyes. And he says, this eye's 20/20, and this one here's still needs some work. But I'm like, I said, this is NMN stuff. And I was telling him about it. He goes, you know what? There's some research on nicotinamide for your eyes. And he says, there's not a heck of a lot, there's not a large body of evidence for it yet. He says, but he says they've had some promising results with it. So who knows, folks? We might actually have this DNA repair thing going on. So anyway, I bought a whole bunch of this stuff, and it's naturally occurring in your body. So it's not some chemical. It's naturally occurring. So I'm all into the natural stuff. So anyway, there's something. Anyway. NMN. Not MNN. You'll see it right there. Right there. That's nicotinamide mononucleotide. I'll see if I can find it here. No, I'll send you guys a link. I'll put a link up there for you. NMN supplement. Renew. These are the dudes you want. Copy. Here's your link. Oh, it's not posting it. Why is it not posting it? Oh, it ran out of letters. Okay, stand by. Let me give you the one here. That's what you want. I'm not a big promoter of other people's stuff, but I do like this. It's not cheap, but that's it right there. You're very welcome, Glenn. You're very welcome. So you're going to take a couple of those right now. You got to take it for a few months to see if you feel any results. But there's been some really cool research, especially if anybody on metformin in here. And I'm not giving out medical advice by any stretch, but anybody on metformin? No? Oh, you are? Oh, you're gonna love this shit. I tell you. Um, look at the research done with metformin and this stuff. Go look at David Sinclair stuff. And he had his dad on it, and his dad was a diabetic. Took metformin with this, and he said metformin with this really helped. Now, I'm not saying take metformin. That's for diabetics. Usually for if you're non-insulin dependent diabetic, you're low on insulin producing cells in your islets of Langerhans in your pancreas. Anyway, look at his research. Look at his stuff, man. It's I have been on for a few years for the same reason. I was also a medic in the military. Oh, there you go. Nationally registered EMT. Yeah, but the studies of metformin are fantastic. I will. Cheers. Yeah, Glenn, you'll love that shit then. That metformin that he used with his dad, and how he got some amazing results with his dad who was taking that. Yeah, you want to, it's called senescence, when the cells start to go into like zombie stage, where they've actually identified where the DNA breaks down. And if you understand anything about CRISPR, like go study CRISPR. There's a book called The Cracking Creation. Really good. Talks about how the people who came up with CRISPR, which was that gene splicing technology, and you find out how, or study how that happened. That is absolutely incredible how that whole gene slicing came to be by this little tiny micro bug that is literally teeming around in the world, but defends itself by attacking the DNA and splits the DNA of its aggressor. And they took that, what that guy was doing, and used it to split human DNA. And now you can splice in new pieces of repaired DNA and heal. Well, they're hoping to be able to literally regrow things, to fix things. Cancers have been identified for their various DNA, so they can splice in where the cancer cell has changed as a result of the DNA change. They can use this CRISPR to go in and splice the DNA out and then reinsert the good DNA and kill the cancer. But David Sinclair is all about, hey, how about we just repair the DNA before it goes mutation mode on you? So anyway, look at his stuff. It's really interesting. So I'm in a short here. I'm not sure how long it's going to last, but I'm in a short off this low here. And I'm not sure. Stop loss is still sitting up here. So I'm not sure how long, if this will last. So my fail safe is this. If we get through this on a close, then that last little premium array up there is my line in the sand. So my stop loss and my fail safe are pretty close. So I'm willing to give up my return into this order block here to take out this low and see if, and then I'm going to move my stop loss into break even. Sell model now. And it's lunch hour, right? So you get this retracement. we may just see a big blast back here. But remember, we're talking about that hourly retracement that we wanted to see. See how it's starting to form now? So let's just see if we were, how close we were to hitting that mark on the high. Right there. So if we take our off of here, that takes out the highest and hits our objective. If we just come back to that candle's high here, if we just come back to that high, that's going to fill us in on that daily imbalance right there and bring us right back into this breaker, right to the money on that breaker. So this would be a nice little place to see it dip into right now. And now, and then, so when you're looking at this during lunch hour, around that 1 o'clock, 2 o'clock this afternoon, look for the reversal here off of this whole run in these two candles right here. Look for it to start from here all the way to here, to the mean threshold of the two candles, all the way down to the low and a fill of that fair value gap. On the BISI, look for a run all the way into the middle of that candle's body and then a full rebalance of it. We're just shy of touching that 691 right now. We're at 694. See, we're already digging back up into that level here. We've got this consolidation. 50% of that range. You want to see this break this high and start running to that area there if we're coming up higher. If you're thinking about, if that was the low, we didn't get our 691 that we're looking for here, and we break this high and we use it for support, then we're looking to perhaps go higher. That our rundown on the hourly, this rundown on the hourly was all we're going to get. Well, that's 15 seconds. All right, hourly's right here. Then we'll look for the next hour. So maybe the next hour, this creates our fair value gap here, which is fine. It just stopped right here, gives our fair value gap. The next one taps it, institutional order flow entry drill for a run higher. So I'm out of that now. I closed out of the trade. What trade here? And your premium array, there's your premium array hit now. And now if we run through that, see how you hit it like right on the money? So if that rolls over and comes back down, great. If not, I'm glad I got out. So in order for this to be so I'm not even going to touch this now until I get my manifestation happen here next hour. So you're looking at 12:30, 12:45 right now. So I would wait till 1:30 for a dip into here and then look for a reversal. Other than that, if you like what we did today, hit the like button. And if you're new to our channel, hit subscribe, notification. I'll let you know when we're on. I do appreciate all you guys spending your time with me. See how we're above that premium level now. So it's a good thing you get out when you do. If you start to write, if it doesn't feel right, and you have your fail safe, and your fail safe starts to go, why risk profit, especially in lunch hour? So get out. So there's your premium array hit, ran through, come back, reevaluate it, and continue on. So when we talk about bodies getting above a certain level for MSS, does that mean the body should close above the wick as well? 100%. Yes, indeed. Yes, indeed, we do. So now you see how we're using this level, the premium level, to go up into this high here. You want to see these equal highs get taken now, this tap down in it. You want to see that start going higher. I'm not going to touch this right now, but if you're actually watching these candles, just study it right now. In lunch hour, you could get lots of bashing around in here. So paying a premium for something that can quite easily rip into a consolidation will end up beating you up. So anyway, hit the like button. Thanks for tuning in. I appreciate you guys and your time. My back's had enough. It's 10 to 11. I'm shutting her down. We've been here for 3.5 hours, 3 hours or more. So many thanks to all of you. Sending some love, my friends. Thank you very much. I do appreciate your time. Love, 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 love to all of you. And looking for this to start the next price leg higher now. Francis, my friend, it's my pleasure. My pleasure to help out. If this helps you guys and your price action study gets better and better each and every time, and you're not stressing out, man. How many times I told you a whole bunch of trades I was in. I even took some losses today. But stay true to your analysis and you don't stress out. You don't get all emotional and bent out of shape on your trades. If you have a sound logical level, you see that, trade right back through it on the wrong side. You're back inside this range now. Hence the reason lunch hour will beat you up. Be careful. So if that taps that and keeps coming lower, you'll know why. If it runs above it, then you got, okay, so could be the next price leg higher again. So that's the power of lunch hour. They can beat the crap out of you. So watch your wicks, watch your bodies till the body freezes on it. You want to see if it keeps coming lower now. Yeah, so once you study this and you get more and more comfortable with it, you'll get to the point where you're not stressing out over your trade. Your fail-safe is there. It's protecting you. Your stop loss is protecting you against quick, unexpected moves. Your leverage is exactly what it should be, 0.25 to maximum 2 to 3% of your account. You have a trade plan. You see this. You see the model setting up. You see the levels. You trust the levels. If you don't trust the levels, watch it enough till you get to the point where you do trust it. And then get your solid rules around your fail-safe. Once you have that solid fail-safe, there you go. There's the plunge down into the discount portion of that consolidation. I told you, lunch hour, you can get the shit beat out of you. So be careful. This could be another big punch down into that level we're looking for on the hourly. Again, 670. And there's your reverse right there. See, you're going to go higher. And then all of a sudden it popped through and said, no, I think I'm going to come lower. If you caught that short for the low, you just made 20 some odd handles, 23 handles, 24 handles. Now, we did not get a body below here until here. So now if we don't get a retracement back into this, and that just tears on you and runs all the way back into the 60, 70 level, look for a reversal starting to form there. There, finally came back and tapped it. And we have a reverse here. So now you have to ask yourself, am I going to trust this one to come lower, or am I going to trust this one to come back into the range? It's lunch hour. Just watch it, study it. Right there. See that? So now you've got to change in direction, back inside a range, and you've got a breaker here. You want to see hold price. and then reverse and come back through. So if you see it go through here, tap this, then you get a little happiness on the way down. Otherwise, pull your fib tool from high to low. Look for 50% of that range, which just hit it now inside the breaker. Now let's see if that holds and comes back down through here. And then look for that as your next price leg down. So if that was the high right inside this candle here, the downside is our 670 level. If that puts it on there, that puts us at 674. So 4 handles short of hitting our level there. See how we popped up, tapped it, and start to go back inside that range again. So you're back into greater than, there's 62, 70, often trade entry reversal. If you take the whole range from there to there, see if that makes it down to 70. Or you can reverse engineer and do this. You do this, you go right there. See if that holds. It doesn't. You're coming back in. I was going to say, if we set this at 70 as being our point of stopping, then you see how it's come back and hit this old high right here, that order block. Look at the high of the order block on the hourly. It is 68525. Look at the low on this candle, 68425. So one handle into that breaker, or sorry, that, yeah, I guess if you look at this low here, those 2 order blocks there, you hit the high and you get in a nice reaction off of that. There's the reverse. So that's why you got to look for these key levels. See a reversal, perfect entry for a long, and so far you're cleaning up. Now you want to see if we get a retracement back into this candle. And you want to see, because we've run through this on a close. So this one, you got this one right here. It ripped through 1, 2, and then 3. So you look for the second one, retrace into here, tap there, run higher, extend the range. Through this level, you want to see if this level holds now. Taps that order block that we're just looking at. Now I want to see if it comes back through here and goes higher, and we're not getting into that lunch hour lashing again. So we're not going to reach for 670 just yet. We're coming all the way back into this one, then this one, and then this one. So premium array. I keep saying I'm going to go, but I don't. I may sound like Michael. Okay, I'm out of here. And then he keeps talking. On a 1 minute chart, that's just retraced back into the, oops, undo here. It's just retraced right back into that reversal. You've traded above it. You come back inside it. Right there. And now you want to see if it gets back through this level to the upside, find support, and keep pushing higher. And that would set you up for a 12 o'clock or 1:30 reverse back into here. And we get an institutional order flow entry drill right off of that and go higher. Yeah, that's some ideas. So if we look for this guy here as the high now, that puts you right on that mean threshold, or the consequent encroachment of that there. Anyway, if you're on the wrong side of it, it'll close below here and use that for support to go lower and extend the range. The 1 minute candle just smacked right on it. Now I want to see that, see what 58 does. Right inside the mean threshold of this candle. If I pull that fib tool from here to here, mean threshold of this candle is right here at 697. So anyway, that's it for me. I'm out of here. Again, before you leave, how long do you trade? I can trade all day, morning, afternoon. It depends on the how the markets are acting. It's if I see my setup, and don't forget my setup happens on a 1 minute chart so regularly that you've got all the adrenaline junkie stuff you need to fulfill all your desires. So it's not a specific time, though, or not a specific number of trades. I could trade a dozen times, 2 dozen, doesn't really matter. If I'm just seeing a small little range, I might just nibble a piece of cheese out of there and move to the sidelines. You might see this boxing technique. I just go box, and I'm out. Box, I'm out. Might be 10 handles, 20 handles. They don't have to be grand slams. They just have to be small little nibbling prices. And you slowly nibble your profits up for the day, the week, the month, whatever. So my number of trades should be kind of irrelevant to you. It's the setup that's more important than the number of trades I take. Before you leave, thanks Darren, thanks for everything. ES still failing to take out lunch, sell side liquidity. So far bullish SMT, but the move from AM low is still premium here. Ah, yes. So you have to find, again, what time frame are you on, Francis? If you're judging what's happening now on a higher time frame, then you're going to get yourself beat up, because we're just looking for a simple reversal pattern. We're looking for a small range run. We're trading internal range liquidity. If you say, look at the extreme premium you are in right now, why would you want to trade that? You're paying premium prices. Well, it's only because I'm inside a small range that I want to trade it. So I'm not trying to trade the hourly chart, though I am getting a keying off here. I'd like to see that hours now done. I'd like to see that start pushing higher. If we come back and tap this institutional order flow entry drill, then great. If not, this reversal is good enough for me, man. If we've just come back now on the new hour right here and just grab this reversal that occurred on a 1250 macro, and I'm looking for a higher prices, that's great. I'm not worried about it coming back into here, because your stop loss is literally sitting below that. And now I want to see it break this high, use this for support, start getting back through the premium box, and then run for the highs. And then we look for an extension. And you'll be like, how did you trade a premium for a higher premium? Because we used a lower time frame to leverage a higher time frame expectation on a continuation. And if I'm wrong, I'm not going to take a beating all the way down to here. I'm going to take a beating somewhere inside that wick. which is just below here. My fail-safe is here. So if I trade below that candle again on a close, I'm out before it even touches my stop loss. That's my fail-safe. Darren, look at 5 minute. Okay, let me. I'm gonna look at 5 minute Eddie. What am I looking for in here, Hadi? What am I looking for? Other than I got to get above here on a 5 minute. Last down close candle, the open is nice. I want to see it climb up above here's this order block though. And otherwise, to be bullish, you got to get above here on a 5 minute chart. And if not, if this wicks over here, rolls over and comes back down again, you're looking for a run for an institutional order flow entry drill, pop below here. So I'll see that on a 1 minute chart. I don't know what it is you're looking at here, Hadi. Which one is stronger? You repriced like a genius. How long have you traded altogether and ICT Concepts? I started back in 2016. August of 2016. I know zero. I didn't even know what any of this stuff stood for. Zero. Knew nothing. Nothing. I was as green as grass. I knew nothing about markets other than what I'd lost in listening to my friends tell me what to buy in stocks. Believe me, I lost a lot of money. Trust in other people. Now I do my own thing. So, and I started in my 50s. So any of you guys got those young brains, you got lots of hope. You can curb your impulsiveness and you actually follow the rules and you listen to what the old farts are telling you. You can make a living at this. I haven't seen anything from Chris, so I'm leaving Chris alone. Let him he's on a journey. I'll let him figure it out. I'm not going to give any more advice. I'm just going to let him stew in that for a while. He was supposed to send me some homework and he never did. So that's it. That's all the help he gets. When he figures it out, I hope he figures it out. But he'll be back. Yeah. So what am I looking? You're saying which one's stronger, Hadi? Inversion fair gap or that 3 bullish candles? For me, the 3 bullish candles, if we can get on top of those, then I like the 3 bullish candles for support to motivate us to get up here on a 5 minute chart. Otherwise, you haven't got on a 5 minute chart, you haven't got really a reversal yet. I'm just looking at a 15 second or a 1 minute chart. See this reversal here, taking out that low. So I'm pretty much stuck in here right now. Looking for this, the hold in a 1 minute. And I know you see it very clearly, Hadi, but see how we've traded above it, and we even traded above this candle, and I go, ooh, that's good. We come back into here and we start going higher. So I want to see this slowly march out of here. This is just kind of painful to sit here through a 1 o'clock now to see if this actually takes out that high. And here's the premium array that you want to see it get through right there. See that? So you pull that all the way out. See how the bodies are going above it? So I wanted to see it get through there. I got along there. I've had to endure all this. Now it's more like break even. So I want to see this keep going higher. This suddenly goes snap down here and takes me out. It's not going to take a lot. I'm telling you that right now. I've got the lowest leverage on this because I'm coming out of lunch hour now, and this level here is failing. Like that level there is failing, and we're deep into this discount. I'm out. I did not want to see the consequent encroachment get hit again, so I'm out right there. So the small loss. But again, the principle is the same. I'm not upset with the trade at all. That was the setup I wanted. It did not go any higher than that right now. So, and the idea that this is what we're looking for in the hourly for the fair value gap to form, and that's to give us an institutional order flow entry drill to drop into here. It only makes sense that it probably should have come down one more time. I was kind of on a hope that maybe it wasn't. It was just going to leave, but stick to your original plan, man. That's what we were asking for. Go back. You'll hear me say, I want to see it create a fair value gap here, do an institutional order flow entry drill off that candle's high and go higher. So this candle's open. So 670 level again. Back down here. We'll see if we get it. See, it came right back in there. It's giving you the probes, saying, guess where I want to go. It's giving you the probes. So I just want to make the money back I lost there now. And I'm just trading my plan, that's all. My stop is sitting right here. You see how this low is taken, and this, we have not got a body traded below here yet. See how the wicks, you could see a run back up into here, this order block. So I don't want to see this mean threshold get taken. I just want to see this trade below here and then use this to leverage that position there. And my take profit is right here. Now I'm at break even. I'm sitting right in here now. So it's a zero stress trade. Actually, it's paid for the trade. I got the trade off, or I got the whatever. I've paid for the trade as well as so I just want to see if that gives me my money back that I lost on that small little trade there. So now that we've traded below that, I can see it come back into this one more time. So I took my profit right there at rejection block, and then I want to see if it comes back here before taking out that low. If it doesn't, then it takes the low, whatever, no big deal. I'll look for a reversal here now, aiming for the hourly reversal. So I just took my loss here. I just took that back right there at the rejection, and I'm sitting here waiting for a reversal now, looking for that 670. Oh, you want to see 50% of this and go higher. Wow. Don't forget though, Hadi, you've already ran the premium level out. So you want to see range extension, come back to the old high, and then push higher. You don't want to see a 50% retracement back into here. That would take out that whole That would be, well, wait a second. Wait a second before I open my mouth. Yeah, 50% could bring you right back into the bottom of that fair value gap. I don't want to see that though. I want to see this whole thing stay open. And this breaker that takes out this low, these two candles, I want to see that whole price. No different than anytime we see a little run above a little high, you come back, you tap it, and you want to see it keep going. Like for when we did all this stuff. Like this is a good example right here. You see this? When we have price run above a high, you want to see it come back and just tap it, or tap the top of the fair value gap. You do not want to see it run into 50% of this retracement here. You want to see it pop up above it, come back, give it a little kiss, and then start driving higher. That's what we're looking for here. If we see if I see that run through this mean threshold of this candle, I'm expecting a 50% return into that range, or at least a run deeper into this BISI here, right? But in order for this to be bullish and we want this upside objective, this has to hold price, and that has to hold price for me. That last top candle, mean threshold, is my fail safe. I don't want to see that get taken. You can touch it, but I don't want to see it leave. Does that make sense? So I'm not saying you're wrong. You certainly could come back there. We want to see an institutional order flow entry drill on the hourly, which puts us right back in line with those equal highs again. You've broke them with a body. Now you just want to see it tap them and go. So what we're doing is we're just doing the same principle that we're doing on a 1 minute chart on a 1 hour chart. And the 1 hour chart has given us that one thing we're looking for the extension, for the run, for that next price leg higher. I want to see that price leg run from that candle. Because what we did on a 1 minute chart is no different than what we're looking for. It's no different than when we have a low taken on the downside, you trade back into it, this breaker, and go lower, right? So that's a classic 2022 model, right? When you trade below, you come back up inside that, or a fair value gap, and a breaker inside the fair value gap, then you keep going lower. It's the same thing. I'm looking for this here, fair value gap right here, breaker inside a fair value gap. Ooh, baby, give me a long. Give me a long. We're just doing the exact same thing, but in reverse, in a bullish trend versus a bearish trend, off of a very key level. So we're looking for any opportunity for that 670 to get hit, or all of this now to get a nice big displacement candle at the 130 level. Because 130, it's done. That's where Michael says your 1130 to 12 or 130 model is. You look for that little bit of retracement. Well, look at this. We were calling this on this hour. We were calling for a fair value gap to form, which is this one. We wanted to see it end in here and use this high to leverage it and go higher. So ideally, institutional order flow entry drill, tap and go. That's the perfect one for me. And that's sitting right there. Or a big ripper of a displacement at 1230. Or sorry, 130, or the macro, the 130 macro, 12 or a 150. Do you see a nice 150 macro in here? And it starts to rip through. And it's giving you your idea. Then you say, I'm going to take it. And I'm not worried about 50% because my stop loss is going to be up in here somewhere. People go, why the hell is your stop loss so close? Well, because I'm managing my entries on a 1 minute chart, and I know where it fails for me if I'm on the wrong side. If this decides to come back down now and dig deeper into this range, it's going to fail on a 1 minute chart or a 15-second chart long before it fails up there. So that's how I'm managing it on the lower time frame. If that makes sense, hope that makes sense to you guys. So we use the lower time frame or the higher time frame to give us a place to look for. We look for our reversal on the lower time frame, and we set our fail safe. And then if you want, let it go. Don't keep mucking around with it, because every little tiny reversal that you see, you're going to be chickening out, and then all of a sudden that's slowly going to be doing this reversal, and you're going to be jumping in and out all scared. You say, look, I'm just looking for this, and then I'm going to let it run, moving to stop loss and to break even. and let Jesus take the wheel, right? You're going to be right on there, aiming for that old high, half the wick, old high, and then upside objective. Got it. Note no, the same. Does it matter if price hits candle close and goes higher, or just the wick like it is now? Ideally, I want to see this candle's low get hit, which means this candle's body. So this candle's open or this candle's close. I'm looking for that. Just a little tippy tappy, and then I want to see a nice snap off of that. Nice reversal. Give me a nice structure break, a market structure break, which is this market structure break, come back, hit our objective. This very thing we're calling for here is what I'm looking for on a 1 minute or a 15-second chart. When I get to my objective, I want to see pop up above it like this, rip right through it, and then come back and hit the top, the breaker, whatever the breaker is up here. And then I want to see it gun out of there. Stop loss will be sitting down in here, right near the bottom of your wick. And you'll catch it, and it starts to go, and you'll go, man, I caught that sucker right there. Dig down, and you'll see where it is right in here. That makes sense? You got that, Russell? See how we're inside this guy right now? We haven't taken a low. Look at these overlapping arrays. Welcome to shit kicker time in lunch hour. So there's the little tiny, so draw these out. Keep practicing these, man. Draw them out. Draw these reversals and inversions. And you'll see why they become sensitive levels. And look at the difference between discount array. Look at the range you're in and say, where's my premium array? My premium array way over here, right over here. So I'm going from discount to premium. Get rid of this box here, and you'll see the box-to-box trading inside the range. Inside this larger range here, the lowest PD array, not this one, the discount array is right here. The highest premium array is this one here. Draw them out. Box to box. Look at this. Box to box. Ran all the way up into the box. Came all the way back down to the box. Then ran back up to the box. Run down to the box. Trade through the box. Come to the box. And then come down here. That's what you want to see. That's what I want to see. And it's 11:30 and I'm 11:20 for me, and I'm still here. So I haven't had any little twitchers in my back, so I guess I'm still motivated to stick around here. I should be exercising. I know I should be exercising. Maybe it's that new NMM stuff. I just took those 2 pills. They're not painkillers. They're none of that stuff. 22. Sorry, all those other people I said, I'm leaving now, and they all probably just went, okay, I'm out of here. I'm kind of like the Marvel movie, right? Just at the end, when everybody's walking out, they play that extra little piece at the end. This is your Marvel movie. You get a little piece of information when everybody else leaves. See, I'm not leaving the theater till the last credit goes by. So you see how we're just banging around inside that small range from this high to this low? That's the premium, that's the discount. Bing, 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 bing. Now it's like, I'm running out of arrays to play in. Order block does not take the low. Mitigation comes back inside mitigation, all the way to the wick, inside that fair value gap, right back up to breaker, takes out that low, does not take that low, trades back into the mean threshold of it, and now you're like, we're running out of arrays here. So you watch how this bouncing around between these two, and we have to get a bust out of here. Gotta bust out. What are the arrows? The arrows. What arrows are you talking, my friend? These dots? Time in a bottle. Check out my video on time in a bottle. It's not Michael's. It's not an ICT thing. It's mine. But look at, go to the time in a bottle. You'll see why it's an important thing. I don't know what arrows you're talking about. Saeed, yeah. So those are my time in a bottle video. Go in there and you'll see it. And my calendar's almost done. I got a few more months to do. I'm trying to give you guys different setups, like 12 good setups so that you can use the calendar, not only for time in a bottle. I give you time in a bottle for the whole year on my calendar. I give you the best days for you're expecting turns to occur in the year to come. I know you're probably sitting there going, hey, you can't predict that. We'll see. There's the discount again. See that box to box? You love a little boxing. You love boxing. Yeah, so that calendar is almost done. I'll try and put it on a little store so you guys can, if you're interested in purchasing it, you can purchase it. I want to collect, there's only 22 people in here, but I want to collect some money together because I'm going to Africa and there's a school down there. I want to go in there and buy some books and pens. That there's 16 of us going. And I want to buy books and pens. My wife's setting this whole thing up. And desks. They got 1,200 kids from 11 different villages that come to this school. And they've got the kids are all jammed around these very limited number of desks they've got. So whatever money I get off of these calendars, and whatever, I'm going to throw in my own personal money as well. I'm going to get some books for these kids and some pens and some desks and start helping some people out. Do some good things in the world. There's box-to-box trading. Now you want to see, see the range? Box, box. So we hit the box, premium, discount, premium, discount. Now, are we reversing off of discount and running to premium, or are we busting through this using this to leverage and run out the low that finally hasn't been taken yet? And you've got lots of liquidity sitting down there. You got lots of liquidity above you. So wait till you see what happens at that level. See how sensitive that is? It's the fact that it tapped it, stopped there. I like this. This is good. Now let's see if we can use this or run on the low. Invite your friends. If you have friends that are trading, have them pop in. They understand price action. If you study some of the ICT stuff and you're willing to come in here every morning and practice with us, you get good like Hadi. You'll get good like that guy. He knows what he's doing. He's drank the Kool-Aid, man. He knows. He buys into the boxing. He buys into the reversal model. And he buys into it so well that he trades it on a 15-second chart, and he literally clips coupons inside this stuff. And he doesn't care that it's not a grand slam. He's nibbling 10, 20, 30, 40, 50 handles. So while you're aiming for a 50 handle run, he's already collected it inside a consolidation because he's freaking disciplined. He's a trade model, trade plan. And if you haven't bought into the idea of discipline, check out our psychology tab on the community tab, and it talks all about discipline, talk all about how to maintain that discipline, and you too can make money. Oh, here we go. Come on, baby. Are we getting around 130? Look at that. There's the 26, 27 candle. Oops. That's what we're looking for. Institutional order flow entry trail. We're looking for our reversal now. Put your crosshairs out there. Like these are the crosshairs. You're putting them out there now. You're just waiting for your setup. Hadi's not good. Hadi is great. Hadi is an example of a disciplined student. I'm wondering when you're going to take off Hadi and start your own group. Have everybody? I bet you get lots of people following you. I bet you get a lot of people following you. Here's the 27, time in a bottle, looking for a level. Time keeps on slipping, slipping, slipping into the future. Do 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 do. Do 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 do. Look at our little fair value gap. And we're literally 2 handles away from tapping the top of our breaker. We're already in the breaker. We're just, whatever that open is there, the open is 60 or 667.75. 667.75. So we're actually a little lower than this. So when you're looking at this, do you think, I want to see, now that we've hit the level, we've got institutional order flow entry drill. If we break above this old high here, so if we see this, confirm, run inside the range, take out this premium. We want to see this get taken out on the upside. Oops. Get back there. You see this get taken, that get taken to the upside. Use these, find support and off, and we want to see a ripper getting right through this low. It says, look, I've done my thing. I'm on the run higher now. I don't think so. You're happy here. Okay. You don't want all the stress of managing people. So think about this order block. We've traded below it. We've come back inside it. We hit this guy here. There's a small little imbalance right there. So these are all support levels to go lower. And we still haven't hit the objective we're looking for yet. That candle's high or open, and this candle's close is, the close is 668. So this should actually be sitting at 668 right here. So here's the reverse. That's the order block you're bouncing off of. So you can see this and then a continuation on the downside, which is what you're seeing right now, keying off of here. And that is not, we're not getting a body above this level, right? See, there's a small little imbalance. You have to include that as well. No body above that yet. We're not inside the range. So you're back to, we've just traded into here. So one wants to go higher. One wants support to go lower. We haven't hit the objective, but we're freaking close to it. You'd have to be happy with that as a institutional order flow entry drill right here for it to continue. So here's our reverse. The more we eat into this, the more excited I get about the reverse. Once we break structure to the upside and use this upside leverage like this, we want to see that go higher. This is just this right now. You see that? That is that. When we break this, these 3 here, when we break these to the upside, use them for support, we're off. We're aiming for up here. So there's, see how the reversal, right back to it. But don't forget, all you could be doing is just running inside this range. So if you did take this as a run, you pull your fib tool from high to low, use your fib inside this thing because there's not very many PD arrays to really hunt for. So as soon as you entered into here, you go long, stop loss is here. As soon as you hit 50%, you move your stop loss to break even, take half your trade off. You hit 62%, you take a portion off here, move your stop loss to 50%. Now you're really in, now you're out. As soon as it taps you, you're out. But you made that small little run here off of that level at 684 to 69. So you made 10 handles. 10 quick handles to there, and it didn't cost you anything. You didn't lose anything. You paid yourself a portion there, and 5 of those handles or 8 of those handles paid you at full profit. So if that bounces off of here now and goes higher, don't worry about it. You just say, I made some money just inside there, inside that range. That's Hadi discipline right there. 50%, he's out, pays himself, or uses the fib tool to march himself up right on a 30 candle, time in a bottle, makes a high, reverse, pay yourself at time in a bottle, right off the top, bottom of a breaker. Takes this low out. Delish. So now you want to see if this holds price. And a buffering would be if it comes back here and you get to put that trade on again, stop loss goes down here. You've already made money, so that's already going to pay for a loss if you take it here. If it gets below that on a close, you close it out before it hits. So you minimize your losses. That's trading internal range liquidity. And see how you were wrong? You still made money all the way up to 62% right off of there using the fib tool technique I showed you. So watch. Now see how we're trading below it? I don't even like to see wicks getting down there. I'd be out of that. So let's just say you took this. Wait for this to close and see what happens. See, it comes back to the high or the open mean threshold. If this closes higher now, I just said something there that is something you should wait for the candle to finish forming first, then make your decision, not while it's in forming. So I should practice what I preach. See how it closed above? And here I am getting suckered in by the candle. Getting late. Your brain getting tired, man. Wait for the candle to finish. Now, see how it changes the perspective? I said, oh, I'm getting out now. Why? Because the candle hasn't finished forming yet. Came down here, scared Darren out. Yeah, chicken. It just came back to the last important candles open, and then it scared you out, and now it's going against you, and you're like, you dummy. Why didn't you stay in that? There's the next price leg higher. So far, you're not out of this whole consolidation just yet. So there's a small little run. So that's the buffering. Means you get to trade off of it again. Do the same 50%, 62%, pay yourself again thing all over. So you've paid yourself once, you paid yourself twice, and you're still inside this range here. Do you see that? You paid yourself once to the 62%, break out at 50, wait, comes back in, buy it again at this level here. 50%, pay yourself, move to break even, hit 60%, pay yourself, move to 50. It hits 70, move to 62. It hits 75, move to 70, you're out. So now you've paid yourself all the way up here and all the way up to here. And if it comes all the way back down here again, you do the trade all over again. You've paid yourself once, twice, and you're not even out of the damn range yet. That's buffering. That's what I used to call buffering. I don't know why. I call it buffering because it buffers any losses that you could take if it rips back against you. If it's going to go higher, you keep giving it a shot. If it keeps running higher, you've caught it already. You've caught it once, it came back, and you take some money, you put the trade on again. It comes back. Put the trade on again. Oh, and finally you caught up, and then it finally took off on you. But you kept catching the run before it broke out of that range. That's really getting freaking awesome at price analysis. But you've gone from discount to premium again, right? Boxing. You've hit the box, hit the box, hit the box. So you've got one method, fib tool, two methods, box to box. I'll give you several different methods there for managing that. Get up on top of this. There you go. Just closed slightly above it right there. So we want to see these candles here provide some support now and start marching higher. Still not a market structure break yet. We haven't broken structure to the upside yet, so you want to see that. Oh yeah, it's been time to go higher for a while. That's the level we're looking for, institutional order flow. So you're looking for any reversal from this point. Remember, as soon as it takes that low, any reversal, any reversal, any reversal, any reversal, any reversal, any reversal, any reversal at 50. If it keeps coming down, it keeps coming down, then you didn't catch a reversal. Here's the reversal. That's the first one, institutional order flow entry drill. Catch that. Now you want to see a break. If you really want to wait though for market structure break, because you want to be more sensitive to, I want to see a good clean break first. I don't want to see this little nickel and diamond way on. This is how you make money on the little tiny run. But if you really want to catch that reversal, that's what we're looking for right there. So don't get upset, Russell. You say, oh, it's already passed me by. No, we're still waiting for structure break for confirmation. This is way too consolidated after lunch hour. I want to see this really start to get above here. Like a nice displacement candle would be nice. Like this displacement candle would be nice above that high. That's what you want to see with a fair value gap. And this institutional order flow we're looking for here on a 1 hour, you want to see that on a 1 minute chart, and away you go. And if it doesn't, if it just does this, pops up, and then gently comes back, taps this high, I'm all right with that too. We want a breakaway gap. I want to see this stay open and keep going. Wow, D, hats off on your patience. Still going on with the same energy, same flow, even after lunch hour. Thanks, GVK, man. Thanks. It helps when you have ADHD. You can be like, but you can see how quickly you can fatigue yourself staying in a 1 minute chart for 3 hours and calling every candle on a 1 hour. It starts to get, your brain starts to get really, see, this is the displacement. This is the displacement candle we want. Just as we narrate it, that's what you want to see. And it starts to manifest. You get excited about that. Sorry for swearing. But isn't that not exciting when you see it doing what you want it to do? Give us a run, baby. We're above this level now. Look at that. Above it, tap it. Above it, give it a kiss. Come back, give us a kiss. Give us a kiss. And then we want to put our carrot up here. And again, price is acting the way we want it to act, so that's great. Now I want to see it continue to manifest the way we want. See that old high right there? Run above it. Oh no, you're actually still sitting on it. It's tippy tapping, running higher. So there's your reversal. Optimum trade entry reversal. And again, we were calling that 2 hours ago. That's what we wanted to see. And that's what we're looking for. This is how you look for that opportunity. Once you practice this on a 1 minute chart, you look for that on an hourly chart, looking for an objective, and then you go back to your 1 minute chart and look for your sniper entry. That's your sniper entry. So tippy tap. Now you want to see that go. Structure break to the upside. Come back, find support at this. Stop loss has to go below wherever you want to put your stop loss, but decide where you want your stop loss to go. And anytime you see this reverse like this, after taking out a high, be careful. You could be coming back into this range again from premium to discount. So watch you don't get beat up in there. You want to see that hold. So now you have to ask yourself, I want to see this breaker that takes out this. Oh, I want to see that hold price. If its mean threshold is taken, I'm not interested in playing in this. See how we've traded below this level already? So you don't want to start getting into the chop because it's turning on you. Be prepared. And you don't want to see this. You don't want to see that. Otherwise, you're back inside this range again. Now you have to say to yourself, what's my discount box? If this is boxing on me, what's my discount box? It's right here. I don't want to see this level get taken because that was my premium inside this level. We trade back inside it right there. Good. Now get the hell out of Dodge. I want to see you get back through here and start running higher. So like one tick below that low, which puts you back into this order block here. And that's way back into 50% of this small little range here. From here to here. We're already through that 50% level. Good. Take off. Get out of Dodge. See how we've come back through it, inside it. Now you're coming back into that range again. So don't get yourself nervous. Look at the levels and say, what am I willing to accept? I do not want to see it reach through this low here. It's done its thing. It's come into here. I do not want to see it start pounding through here. Otherwise, we're coming deeper into the range, and I'm not prepared to take a loss that deep in case it runs deeper into that range down here. If that doesn't work out, it doesn't work out. You just paid some new information. We've just got some new information here. That could be your out right there. Fail safe right there. I'm out. You pay off that long. You go, then also it changes on you. Go, ooh, I'm out. Wait for a cleaner setup. Wait for it to take that high out. Look for this inversion. Find support at that and keep pushing higher. Carrot, sideline right now. All the time we're below this level. We're still banging off this. Good. We're still one tick below there. I don't like the fact that we're revisiting it multiple times. Makes me a little nervous. So I want to see it get out of here. We could take one more run on that for the 130, 150, or the 150 macro. So be prepared to not get our objective. We'll close our little sniper guy here because I'm not feeling very sniperish right now. So just recognize we're seeing a reverse here, and we have a discount array that we could reach for. I'm out. I didn't want to see it get through here. Now we're through here. If this reverses and goes back up on me, I'm okay with that. Because deeper inside this range, the whole range now, that puts you right back into here. So if you caught this and said, I'm going inside this range again, 50%, you move your stop loss to break even, pay yourself, take half your trade off. And if it reverses on you, at least you've got the next price leg higher and you paid yourself on a little bit of a reverse. When it gets above here, you can get back in sync with the market and go higher. So you've paid half here, stop losses at break even right off that reverse. And it hasn't got, plus the cost of the trade. You made a small little bit of money here and you're sitting neutral because you're waiting for your next little piece of information. Time in a bottle puts us at 45. Next one is 48, 50, 52. So look for this to retrace back into here. And maybe if we get below that, then we're looking for another run on that candle. So you're always prepared to say, where does it fail for me? And this was the example we were talking about earlier. Where does it fail for me in case it does come back and hit this or this or this, or these different objectives that this could reach for? Where does it fail for me? Well, we've just ran the highs out. So run here to take out highs. Took the highs. You see a reversal. We talked about that as soon as it happened. We recognized it as potentially running back into the range. And if that range closes below here, then we're going lower. So don't marry the idea of it going higher and the institutional order flow entry drill and going, yeah, we got it. Oh, no, now it's changing on us. So we may not have it. It's not till it gets back above here that you can start going, yeah, I'm back in sync with it again. That's being on the price action and not committing to the Hail Mary play. You got to go, nope, it's coming back on us. Recognize it, move to the sidelines. You decide in here, your emotional stuff is all kicking in here now. And you say, what's my rule or what's my emotion? Should I weather this? Should I keep moving my stop loss down? I'll just keep, well, maybe if I just move it below here, that's my line in the sand. Oh, what, I'm going to move it right below this guy. Shit, it finally caught me. I saw it right up here and I just pulled my stop loss down hoping it would go higher. No, we're not about hope. We're looking at precise changes in the market. And when they do that, make your decision to get out, take a loss, and move to the sidelines. I took a loss there. I was long on that as well. It came back and it started digging through this. I'm like, nope, I'll wait. I'll wait for something more specific. I wanted to see these. I was getting excited about these displacements. I was like, yeah, come on, get up there. Then this one was like, ooh, wait a second. Oh, no, we're on the wrong side of this damn thing again. And it used it to go lower inside this range. Next one, if it uses that one to go lower, discount box, box to box. We have 5 minutes. Do you really have ADHD or is it a Michael technique? No, I got it. Obsessive, not obsessive compulsive. I can hyper focus on something. Otherwise, there's times where you can't get me to do anything. I just sit there and go, rah. I can't do anything. My mind is all over the place. And I don't know how many times have you guys not heard me say, oh, I got a music song going through my head right now. I get flashbacks all the time. I get calls going through my head continuously. If I watch a video, call comes through my head. I'm instantly there. Instantly there. That quick move makes me think it may have a lower price intended this afternoon. Yep, I agree with you, Derek. The fact that we're not making any major strides to get out of here now tells me we might want to come back and revisit this breaker. Takes out that low. We might revisit this candle. Now, if I lose the mean threshold of that, I'm just going to sit because we just run back into here. Then you've got your whole non-farm payroll Friday. And there's no use trying to milk the market for something that if it's not giving it to you, then move to the sidelines. Demand that price act in accordance with your rules. Don't sit there and go, oh no, it's not doing what I want it to do. Or I'm just hoping it does it. It's got to do what you want it to do. Otherwise, stay the hell out. That quick move. Box to box there. Box to box here, yeah. That's a premium box. See how we got through this one here? We'd have to use this guy here now. That box, because we're inside this run right now. So we got this box, we traded below it. We came back into the consequent encroachment of it. Now we're trading lower. And there's nothing in here. So I'm looking for this box here as a downside objective. And if we reach through this one, now where are we headed? See, we're stuck inside this. That's the next little 50% of this range from here to here. That's where you're sitting right now inside that guy. It's holding it, but you pop below him, discount box, box to box in a larger range. There just isn't one inside this range, or sorry, this range here. Maybe, there's not one inside here, so you have to go with this one. Got to get through the 50% mark. Then you're looking for here. Hey Darren, hope you are good. Good good right now. So far, I had a couple of little jabbers in my back earlier. Right now, they're not bugging me. Just looked at your YouTube and you're still streaming. Yeah, I was supposed to leave a while ago. I feel like Michael, like I keep saying, okay, I'm going to leave. And then I don't. I was just kind of hoping I could catch a institutional order flow entry drill here. And it's not. So I might just take it now. Is there any analysis on when it goes to 50% only or when it touches alternate trade entry 62? Is there any analysis of that? Yeah. Constantly look for, if it hits 62%, that's why you use that fib tool to protect yourself on the way down. If it reverses, then you just wait for your next setup to occur. Here's your discount box coming now. A ba-boom hit. Box to box. Like array to like array. Mean threshold to mean threshold. Now, I want to see if it gets through this, find some support at this, it starts to come lower. Otherwise, like to like, box to box. So the analysis in terms of, look at this range, you say, look, how do you know it's going to come down to, look at those time in a bottle, hey, 40, 27. Crazy, crazy, crazy. Do. So how do you know it's coming to 62% and stopping? How do you know it's coming to 70% and stopping? Time in a bottle, discount array. So this is called confluence. Look for confluences. Like to like array, box to box trading, time in a bottle, discount array. Pull your fib tool, run down from premium to discount, wait for that 50%, pay yourself at 50%, move your stop loss to break even. It hits 62%, move your stop loss to 50 right there. Hits 70%, you pay yourself inside the box, you're done. It comes back all the way up to 62% and takes you out. You've caught that whole run down there now. It's a fib tool technique that works freaking stellar from small ranges to big, huge ranges. So like to like, see now you've taken out this low. If you see this turning here, you get above it, use that for support. You want to see that order block next, and then run back up into discount to premium again. And you see inside this small range, this is a discount, that's a premium. Like to like arrays. That's the advanced stuff you need to look at for your boxing. These last few minutes, I've been back and forth, so neutral and uncommitted so far. As you said, 2 p.m. may show us something. This one is going to be short. Tangerine. Consolidation. Continuation. I want to see this dig through here to get lower or bust through here, the carrot to go higher. These are the two pivotal arrays. I'll remove them for you. So inside that range, if you want to see range extension, you want to see taken from the downside and then continuation. Taken to the upside, look at the mean threshold, continue to the upside. So mean threshold hasn't been hit yet. Mean threshold has not been hit yet. Open has been hit. Open has not been hit. See, like to like. This has been hit. We create this. Oh no, so we have not even. It was hit once here, went higher. Creates one here that hasn't been hit yet, so we've come down to fair value gap to fair value gap. So what you can see next is breaker to open, then run higher to premium array, back down to mean threshold, then go up to open or low, mean threshold. So watch how they act in one of these things. They tend to go from like array to like array, premium to discount inside these small ranges. That's what I'm noticing anyway. Watch how they act inside these levels and say, what candle sits here? What one have I keyed off of? The mean threshold of this candle is what I'm expecting price to go from. This mean threshold here. Look at that, right through that mean threshold actually now. I wanted to see it just hit it, just go from like to like, and now it's marching through it. We've got our fair value gap reversal. Find support at this, use this for support, and go into our premium array again. Box to box to box to box. So watch to see if it comes in here. We get a body above here now. Look at this one for support. I wouldn't even expect it to get back in here just yet. Watch it tap the premium array right there. Yummy, yummy. Hit the carrot. Now, come back and find some support in here. So I want to see it stop on there. Come back into this candle, find support, leave this and this portion open, and use this to march through here and go higher. I'll leave that on the sidelines for a second. Yeah, that's going to be short. But at least I'm not ranting too much. At least whatever ranting I'm giving you is based on candles. You're actually getting the full meat of whatever it is that I'm focusing on. Now this would be great if we can just rip through this, come back, find support at that level and not even touch this. This is my next one. So I'm watching here carefully on this now. That's a beautiful boxing though, hey? Box all the way up, creates a box, reverse. So if you're going long here, it goes up, reverses on you, go, I'm out. Remember I wanted to go long and I said, oh, I'm out. It could come all the way back down to the box. It does, gives you a natural opportunity to get in on that trade to the box. And then you go, you want to see that hold price and go back up to the box again. Holds price, creates a reversal, goes higher, hits the box, and now we're starting to clip through it. This little wick through. So now you say body. There's the open. Finally hit the open. See if that holds now and start coming back down. And if a body closes above this, now I'm looking for this to provide support for the next price leg higher. So you think about price legs, what things are going to kick off of. So if you go from here to here, for example, automatically start looking for price legs. If that kicks off of that level and comes back to this order block right here, and we use the high, the consequent encroachment or mean threshold of it, or the low, I don't care. That puts you right there on that spot. Because that's the retracement you'd expect to see to go higher. So watch this pop into here and see if we get this kind of thing. And then you look for that to go higher. Then I'm looking for Mr. Carrot up here. So closed on it, opened just slightly above it, came back inside. So now this thing's active for an extension if you just look at it as a close. So we could get a nice little just retracement back into that candle. And I'd be okay with that. Which is what we're looking for here, right? I want to see a pop up here, come back into this candle here. We haven't got a pop above this yet. We want to see a pop above here, come back into that, or here. This level here is this level. So you run above it, you come back inside it, and then you start gunning for something else over here. Now we've closed above it. Fair value gap. Come on, just give this a little tap right here. And this is a 2 candle, so this should be a nice little swing point. Okay, I'm going to go now. This time I'm going to go. So thanks you guys for listening to me babble on and on about this. Look at that right off there. Now I want to see this start leaving from here. Get back through here, find some support, and start running higher. There, that's my next price leg. Anyway, I will see you guys tomorrow. I got to get out of here. My back's getting stiff. I got to start moving. I'm really leaving this time. So wait. What's up? Quick question, Kevin. Go. Have a great day. Okay, I'm out. I'm done. So thanks for sticking around. No, I didn't put a D in there. Look for that upside objective, and you understand the narrative behind why it is I'm looking for that level. Anyway, love you guys. See you soon. Sending you tons of love and cuddles to all of you. I'm out of here.